Bam, perfect. So there we go. Yo, what's up for you guys watching this on the YouTube replay? Just know we're going to be doing another stream later tonight. So if you're watching this live or on the replay, we're going to be streaming probably around 7 o'clock or something tonight when we can see how the market's doing. But anyway, let me give you a quick stock portfolio update. I had a few stocks people requested me to look at, and then we'll look at some of your stocks in the chat to see how or to see what you guys are thinking. So anyway, we'll start here with my main Robinhood portfolio. This is my buy and hold dividend growth portfolio. So every stock in here pays a dividend. And now my largest holding in here is now CEG, Constellation Energy. It took over Carlyle Group after this one had a rough week. If we pull up this one on the week, they are down 18% in just 1 week. So yeah, just because of that, that put this stock as my largest holding. And this is your main nuclear play. They own like 50% of all the U.S. nuclear energy reactors. And yo, what's up, What15? Did you get in the Figma IPO? I did not get in the Figma IPO. And yo, what's up? It's Will. Good morning, guys. Happy Sunday. And here's also my Roth IRA. I do have a little bit of cash, so I'm looking to buy some stocks in here, but it's a pretty bad Roth IRA, to be honest with you, but we're pretty close to all-time highs. And then we also have our Weeble portfolio. And hey, I normally don't stream around this time, but we're going to be streaming in a couple hours from now, later tonight, probably in like 6-7 hours. So we're going to be doing 2 streams today. So if you want to hit the follow button, I'd appreciate that. Turn on notifications if you're on the YouTube stream. But also, hey, it's all good. It's Will. What's up, Mackenzie? What's up, Luke? Hope y'all having a good Sunday. Good morning. And here's my main growth Weeble account. So basically, I buy really risk-on stocks in here. We can see like some of our winners and losers in here. Luckily, all time we are green. We're up 13% all time in here, but that's nothing to brag about. We have for sure underperformed the market, but we do have some good winners in here, like Robinhood. Dude, SoFi had just the most outstanding earnings. Like, I'm actually shocked the stock isn't up more. I mean, if we go to the revenue growth, I mean, the revenue, if we look at the growth rate, it was up 42% year over year. So just the most impressive growth. And I mean, the net income was 100 mil. So, I mean, really good margins on SoFi. So I'm really pleased with those company earnings. And you know what, Connor, he said, Dave, do you think the SPY is up this week? Oh, I hope so, man. Dave stock, yeah, this has been one of my also bigger winners. We bought this stock during this, what month was this? In April. So during the April, this stock didn't really even dip in April, but this was the huge April dip, and I decided to buy 4 shares, or actually a little more than 4 shares, but I took a little bit of profit on this stock. But yeah, let me show you why I trusted my money with this company right here, Dave. They just have really good growth as well. I mean, if we look at the sales here, I mean, you can't make this up. I mean, it just hits a new record every quarter. I mean, it's now 107 million just in the most recent quarter, and not just 107 million of revenue, but look at the net income. On that, they made 28 million of net income. We can kind of see the operating profit here. I mean, what are the margins now? A 26% net margin in the most recent quarter. So Dave is pretty cool. And the best part is actually the free cash flow growth. I mean, look at this free cash flow, up 150% year over year. So really good in my opinion. Why don't you use Robinhood over Weeble? I just use all of them. This is actually my favorite app to use right here. So let's see here. Monday, any recommendation of stocks to buy? Yo, what up, unboxing? Yo, one stock I've been kind of looking to buy more of is a Progressive Corp. It's that insurance company. You've probably heard of them before. The stock has had a pretty nasty downtrend, so I'm looking to buy more Progressive. Like they have such good fundamentals. I mean, look at this net income. I mean, they had a record quarter, 3.2 billion in net income in the most recent quarter. They also just started paying these special dividends. So if you look right here, there's these normal dividends, but then they pay out these special dividends, and they do it every January. They did a 75-cent, $4.50. Because they're making so much money that they're able to pay you out more than the normal dividends. So that's a extremely profitable company. So that, in my opinion, is like a great buy and hold forever stock. You can't also I really like T-Mobile as well. I mean, this is another company that just prints money. I mean, they're making it $3 billion in net income a quarter. And this is really a margin expansion story. I mean, look at this margin, 15% net margin for the whole year. If we zoom out, I mean, look at this. This used to be a tough business, single digit, 4 or 5% net margin. So they've really grown the margins here. It's mainly after a lawsuit that T-Mobile won against AT&T, and AT&T literally for free has to give T-Mobile access to all their bands. So, and they're also partnering with Starlink. They're partnering with Helium. T-Mobile's pretty cool. So let's keep going here. Nebus, hey, that's actually a stock that's owned by Nvidia. So if we go to the Nvidia portfolio right here, I believe, yep, here's Nebus right here. NBIS, the stock is owned by Nvidia, but just because Nvidia owns it doesn't mean you should. But let's actually look at the fundamentals. I remember liking this one, kind of see where the revenue comes from. Half of it comes from the US in terms of geographic location. But here's what I really like. Hey, what up, Connor? We'll look at TSSI as well and UNH. Yeah, and look at the revenue growth. This is the best part. The revenue literally went from 11 million to 55 million, up 385%. So this is just an insane growth company. So that's kind of the good news there. You do got to be careful. They are losing like 100 mil of net income a quarter, but as long as they can keep up this revenue growth, I mean, that's really good. So that's kind of the good news. It's not owned by Nvidia. They have 30% ownership or something. Yeah, it's not owned by Nvidia, but Nvidia does own some of them, is what I meant to say here. Yeah, these are all the companies like that Nvidia has a stake in. Nvidia owns some ARM, some CoreWeave. Obviously, we know Nvidia was buying the dip on CoreWeave at like $40. And some other companies like this Chinese crap, like WeRide, man. Don't buy this one. It's kind of an autonomous driving company, but with terrible fundamentals. All right, so let's go look at United Healthcare. How do you use the NVIDIA? Hey, yeah, you just like I have a tutorial on how to use it on my YouTube channel. So yeah, hey, what up, Lukey? Let's see here. So, yeah, it's all good. So here's United Health right here. This one's been a tough hold. I mean, look at this. They just keep slowly bleeding lower. And I do think it might be worth a nibble here. You don't want to have a huge position in this company. Yo, Trapper, oh wait, what's up, man? So yeah, you probably don't want to have a huge position in United Health, but I do think it's worth a nibble here. They did not have good earnings, but it's kind of already priced in. I mean, this PE ratio of a 9.9. I mean, they're trading at 9 times net income. I mean, the net income could fall another 30-40% from here, and it's relatively priced in. But here's kind of the bad news that they did just report. So the revenue grew 12% year over year. So the revenue's up nearly 13% year over year, but the net income is down 19%. So what does that mean in English? Basically, the margins are collapsing. They only have a 3.2% net margin, down 28% year over year. And those 1% margins are huge when you're doing over 100 billion of revenue a quarter. I mean, this nuts. So it's tough, but yeah. They are doing some buybacks though. Like, look, they're making 3.5 billion in the most recent quarter. All you do is go to the cash flow statement, and we can see retirement of stock. Yeah, they're spending a lot on buybacks. 3 billion in the most recent quarter. Their dividend only cost 2 billion, so that's kind of interesting. Anyway, I do think that one's worth a nibble. Again, not a probably full size position, but let's see. Can we look at, I just bought SEZL. What do you think? This is a stock that I recommend everyone should put on their watch list. I don't know about buy this one right here, but put this one on your watch list because this one has some of the most impressive fundamentals of a company I've ever seen. And I'll kind of explain that here. So look at this revenue, first of all. Incredible growth. I mean, it just hits a new record every quarter. The revenue's up 123% year over year. So remember this number, 104 mil of revenue, and net income was 36 million. I mean, look at this. They're making so much net income, after-tax net income every quarter. So if we go to the net margin, this is incredible. 35% net margins. The margins grew 100% year over year. I mean, just outstanding results from SEZL. I mean, I don't believe it. This is a fintech right here. They're also deleveraging their balance sheet. What does that mean, really? So look at 1 year ago. You see this 84% asset to liability ratio. There wasn't too much of a gap, but look at this now. You now own way more equity in the company, 57%. So anyway, Sezzle's doing all the right things. I love the growth. That's like a really growthy company that I own kind of one of their competitors, Dave, but I like both of them. What app is this? Yeah, hey, this is actually a brokerage right here, Jet. If you want to get this brokerage I'm on, it's in the link tree in my bio, that very first link there. It's free. It's an affiliate link too. So anyway, someone said AutoZone. This is a company that literally is such a boring business model, but the stock has had outstanding results. I mean, look at this. In 2019, this was a $1,200 stock. Now it's $3,800. I wonder if they're ever going to do a reverse split, but this company trades at a 26 PE, so a pretty fair valuation, 26 times net income. And here's what they're making, 5, 6, 700 million of net income a quarter. And here's why the stock doesn't go down. It's because they literally spend all the money they make on buybacks. So again, we go to the cash flow statement, and I love companies that do share buybacks, but it's almost like a dividend at this point. This company literally spends so much money every quarter buying back their own stock. It was only 200 mil the most recent quarter, but they're usually spending, like, look at this. If we zoom out, billions a year. So anyway, AutoZone is just a shareholder-friendly company. They don't pay a dividend, but your real shareholder return is through the buybacks that they do. Yo, big man's coming. What's up, dude? Hope you're having a good day. And yo, Sermon, what's up? Someone said any stock like TSSI to buy. So yeah, here's actually a company that I'm gonna recommend. Again, not financial advice here, but this is DCTH, and this is not the kind of stock I normally recommend. Here's what I'm gonna show you. Here's why I would never recommend this kind of stock, because I'm gonna click on the max chart here if it wants to load here. I guess it doesn't. Yeah, so look at this. The max chart, it's pretty much at an all-time low. And this is one I normally wouldn't recommend, but here's why. I'm going to recommend DCTH. Again, I own $100 worth of the stock. You don't want to have this as a huge position, but check this out. This is what's so impressive about this stock. So first off, let's look at the market cap. Let's see how much the whole company is worth. So market cap, the whole entire company is worth $368 million. So remember that. The whole company is worth $368 million, and they're finally getting net income positive. They're actually making net income every quarter. Now, they used to lose a good amount, an unhealthy amount, but now they're actually starting to get net income positive. And this is honestly the best part. So remember how they were worth like 400 mil? They literally have no debt whatsoever and 60 million of cash. So this company has 60 million of cash, no debt, and also the revenue growth. I mean, the revenue is at the highest it's ever been. So that's why I think it justifies a buy. This definitely wasn't a buy back here. The fundamentals were terrible, but look at it now. So even though the fundamentals are at all-time highs, the stock is still like at all-time lows. So that's why I think this one's cool. They're also making a bunch of interest on their cash. I made a YouTube video about this. But anyway, this one I like for the fundamentals. Revenue went from 3 to 19 million. They actually make a liver, it's called Heptazo kit, whatever. It's like a liver therapy thing. So anyway, again, the therapeutics, those industries can be really risky, but they got FDA approved and now the sales are blowing up. So hey, that one's pretty cool. I think it takes a lot of risk off the table when you're a $300 million company with literally no debt and 60 million of cash. So I think that's interesting. How can we see all this data? I saw Moon by having the same solution. So yo, Rick Sanchez, if you go to my YouTube channel, I have tutorials on how to use this app, but yeah, if you want to get this brokerage I'm on, it's in the link tree in my bio, the very first link there. Yo, Starboy said APH stock. That's actually been one of my best performers. Check this out. If you're wondering why has this stock done so good, first off, the earnings have just been very strong, but a lot of their earnings growth has come from tech and literally Nvidia. So Nvidia made this new product. It's called Nvidia NVLink Spine. It literally uses 2 miles of copper cable inside of it, and that is supplied by Amphenol Group, or at least some of it. And I mean, you can't make this up. I mean, up 101% year over year, literally to a new record. And that's just the communication solutions. They also have like, look how diversified that they are, like harsh environment solutions. How did that do? Up 38% year over year, also to a new record. So for an S&P 500 company to grow their revenue 56% year over year, and on that, so here's the crazy part. The revenue grew 56%, but the net income grew 108%. What's that mean in English? That means they're growing their margins. They have the highest margin they've ever in history, a near 20% net margin, a 19.5. So anyway, the free cash flow blew up as well. Free cash flow is up 114%. So Amphenol, everything's headed in the right direction. They're just a quality company. I don't know about buying it now at all-time highs. So should I buy Copper Game? What up, cats? Will you look at PL and RDW? Yeah, AutoZone's a bit expensive. Yeah, we can look at Nvidia too. Can you look at PL stock? Someone said. Planet Labs. I don't know if I've heard of this company before. It's a $1.9 billion company. They're losing net income every quarter. I don't love that. The revenue's up 10% year over year. An all right balance sheet, though it did leverage up a bit year over year. Actually, this is really interesting. Google is the largest shareholder. Alphabet is Google. So I technically have exposure to this stock through my Goog. So that's really interesting. That actually changes the game. I didn't know. I'll add them to the watch list. I didn't know Google had. See, that's why I like going into details here. All right. Someone said, isn't Nvidia overvalued? Yeah. It might be, but there's a lot of earnings tailwind for Nvidia. I mean, they just got approval to send their chips back to China. That's going to be an earnings tailwind of over $5 billion. And obviously, here's what they do. Obviously, we know Nvidia sells GPUs. They have a 20% PC GPU market share. But they're also huge in data centers, man. A lot of data centers, if you're not Nvidia, you're ordering Nvidia chips or AMD chips. Well, Nvidia, they get the chips first. They literally make them. They can get them at the lowest cost, so they can make their own data centers at a way lower cost than anyone else. Also, Nvidia competes with Tesla. If you saw the Lucid new cars, Uber did a $1.2 billion of Lucid cars, autonomous driving. Those Lucid cars are actually using Nvidia software for the autonomous driving. Pretty interesting. I mean, uh-oh. Well, There goes the TikTok stream. You know what? Maybe I can log into my second account. But yeah, all right. So anyway, we can see the automotive revenue here pretty strong. But here's the best part about Nvidia, in my opinion. It's just the growthiness of this stock right here. I mean, look at this. The computer networking revenue is literally up 75%, literally to a new all-time high. So I mean, absolutely incredible results. One second here. So yeah, and it's not just the revenue growth here, it's also the net income. So if we go to the net income right here, I mean, this is crazy. I mean, they're making nearly 20 billion of net income every single quarter. I mean, you can't make that up. That's super impressive. So let me get my phone. So sorry. Hey, I'm logging into my other TikTok account right now. So anyway, yeah, if you guys got any stocks in the YouTube chat you want me to look at, I'm so sorry. I'll just need 10 more seconds here. We'll for sure look at them. So yeah, basically, here's my main buy and hold account. If you kind of look in the top left, it's called my buy and hold portfolio. Oh my goodness, dude. Is that not my password? That's not good. Okay. All right, sorry. Let me actually show you my Robinhood account real quick because we can pull that up in the meantime. So yeah, here is my Robinhood account year to date. We're up 9.22%, which is pretty cool. In the past year, we're up 18%. How's the S&P 500 doing year to date? I think we're doing just slightly better. They're up 15% the past year, and year to date, they're only up 5. I mean, that's still really good. I mean, our portfolio tanked during this April dip, and all you had to do was literally just don't sell. All you had to do is not panic sell, and you're doing really good. So that's what's cool. Boom, there we go. All right, I think I got the live working. Comment a stock live. There we go. All right, cool. Sorry. All right, we're officially back. Sorry. All right, SoFi, UPS stock. Let's go look at UPS. Yeah, man, that's like a dividend play. I don't love that one, to be honest with you, but let's check them out. So United Parcel, yeah, dang, look at that. So UPS reported earnings and the stock tanked after. That sucks. So I remember their dividend payout ratio being kind of high. So yeah, look at this. Here's the bad news. This 96% payout ratio, not great. You're basically buying them for the dividend. 7.75% dividend yield, pretty good. A PE of 12. And did this decline year over year? Average revenue per parcel. It actually went up, actually. So that's good, kind of. Let's check out the net. Or let me see what they reported. So they slightly missed on net income. So that's kind of the only bad news. They slightly missed on net income. But yeah, look at this right here. They're making 1 to 1.7 billion of net income every quarter. But how much does the dividend cost? So they're making 1.7 billion of net income a quarter. And this, let's see, cash dividend pay. So the dividend cost 1.35 billion every quarter. So some quarters, like the past 2 quarters, they couldn't afford the dividend with the net income, but these 2 quarters they could. So yeah, the dividend payout ratio is a little high. That's the one thing you really got to be careful with. Hopefully that helps, SoFi stock, yeah, let's go look at SoFi. What up, Solana and beyond? So SoFi, this is one of my best performers here in my Weeble account right here. We got some big losers, obviously, but SoFi has been one of my best performers. We're up 250% on them. I regret every share I've ever sold on SoFi, and we actually bought most of our shares, way back here, way back in 2023. So I've been holding on to this company for a long time, and this is one of my favorite fintechs out there. They have their own banking charter. People are really starting to take them serious. They're making net income. So they have the student loan business, the lending business, which is really big, but the main growth has actually come from the financial services, and this is huge. This is up 101% year over year. So that's why I think SoFi might deserve the high valuation and the high PE, just because they're so growthy. And it's not just the revenue that's growing, but it's also the profits. I mean, the net income went from 17 mil to 97 million. So they made 100 million of after-tax net income this quarter. I mean, people are really starting to take SoFi serious. It's huge growth, 42% year-over-year revenue growth. I love it for SoFi. So that's one that I think you should just continue to hold that one. I really wouldn't sell out. I wouldn't sell out of the whole entire position right here. Maybe I'd do a slight bit of trimming, but I definitely wouldn't sell out of the entire position. So, made good money on SoFi. Yeah, that's what's up, Solana. Me too. I'm just going to hold that one for the long run, though I don't have many shares. Oh, Big Man said, what's your biggest loser? Probably ChargePoint or UiPath, and I'll show you that after this. So someone said Grab Holdings. Yeah, what up, Hunter? Hope y'all are having a good Sunday. So here's what's cool about Grab. The largest shareholder is actually Uber Technologies. So kind of see here, Uber owns 13%. Toyota Motor owns 5.4%, which is pretty cool. So kind of backed by some big names there. And what does this company do? Well, Grab literally does exactly what Uber does, but in all these other countries. Check this out. So notice the US and Canada aren't on here. That's why it was genius for Uber to invest in some of this company. It gave Uber instant international diversification. And look at this free cash flow they're making. 14% of this obviously goes back to Uber because they're the largest shareholder. But I mean, I love it. Revenue's up 23%. They're net income positive now. They made net income every single quarter the past year. The free cash flow is really positive. They're investing in the future. So yeah, look at that cash from investing activities. I love that it's negative 200 mil. That means they're investing in new assets. I mean, this is great news. So anyway, Grab is a really cool stock, I think. Do you just trade or do you do options? I mainly just buy and hold great companies for the long run. ZZ said I wouldn't buy anything right now. It's all overvalued. Hey, I get that, man. And Steve said Reddit stock. Hey, that's another one of my best performers, or at least in terms of Friday there. I got 4 shares of Reddit. And check this out. Look at that huge gap up on there. So Reddit had incredible earnings, and a lot of people think this is just a meme stock. They hear the name Reddit, but let's judge the company based off the financials. So forget the name Reddit, for example. Just forget that they're called Reddit. Let's judge them like we would any other company. How did Reddit pull this off? I don't know. But after growing 53% the previous year, the revenue grew another 78%. I mean, no one expected this. I don't know how Reddit pulled this off, but up 78% year over year on the revenue. And the net income's up 10x, obviously, comparing from small numbers there. But they're the most profitable they've ever been. 90 million of net income just in the most recent quarter. This is a pretty, this is a fortress of a balance sheet. They literally have no debt whatsoever. And check this out, cash. They have 2.06 billion of cash. So anyway, the free cash flow as well at a record, up 300%. Everything about Reddit, in my opinion, is headed in the right direction. Their ARPU, their average revenue per user, is like $5 per user. It's crazy. So anyway, that's why I own them. Hopefully I can find this stock for you. AGTHX. Yeah, hey, I typed that one in, Hunter. I couldn't find that one. AGTHX. Yeah. Are dividends good for the Roth IRA? Yeah, they are. So, everything in the Roth IRA, and I do have a small little Roth IRA here, it's tax-free, so you double your money out of stock. You don't really pay any tax on it, which is pretty cool. One thing I will say, I don't mind holding every stock in my taxable account. My main taxable account pays a dividend. Every single one of these pay a dividend, and guess what? Every single time I receive a dividend from all these companies, they're all completely tax-free because they pay qualified dividends, which is pretty cool. So that's why I don't mind holding dividend stocks, even in my taxable account, since I make under $50,000 and they're qualified dividends. It's taxed at long-term capital gains, which is literally 0% for me. And for anyone else who makes under 50, 60K. Yo, Bobby, what's up, dude? Hope you're having a good Sunday. SoFi strong, maybe dilute shareholders for now. Yeah, SoFi did acquire something in recently. Palantir reports this week. Yeah, man. And Snowflake. You will look at Snowflake first. So Snowflake is like the competitor to Palantir. It's like one of Palantir's biggest competitors. And there's some really good news and some really bad news about this company. So here's the good news first. They are extremely growthy. I mean, look at this annual revenue growth. I mean, for the full year, or this is actually fiscal year, but same thing basically. For the fiscal year 2025, it was 3.5 billion, a literal new record. And in 2020, it was 250 million. So just in the most recent quarter, it was $1 billion, 9,996. So, I mean, incredible numbers there on SoFi. But here's the Snowflake. But here's the bad news. They're losing a boatload of money right now, and that's what makes this a tough buy. And it's not really headed in the right direction either. They lost 35% more net income losses in the previous year, so not great on the net income. And that's what kind of makes me hesitant to buy this one. But I love the growth there. I do love the growth. And they also leveraged up quite crazily. So look at last year. This was a pretty good asset to liability ratio. You can kind of see the huge gap there, only 37%. But look at it now, 70%. Their liabilities have really gapped up. You own less equity in the company. That's because these huge net income losses added to the liabilities, or their assets just go down. So yeah. Palantir, though, I really like them, but Palantir is just insanely overvalued. You know, we'll look at them too, because I saw someone say that. Astera Labs, yeah, we can look at them too. What's your return on investment for this year to date? Yeah, we're up like 9% or 10% year to date. So, and I'll show you that if you want after this. Here's Palantir. I mean, this company, most of the revenue comes from the government. Check this out. 55% of the revenue literally comes from the government, and it's up 45% from the previous year. So this is just an extremely growthy company. Again, the valuation's pretty nutty. They're trading at 116 times price to sales. So not like price to net income, but literal price to total revenue, it's 116. That's pretty expensive. They also have this commercial revenue with like S&P 500 companies, and they're making net income every quarter as well. And they also have a monster balance sheet. They have no debt, lots of cash. Cash is earning interest on Palantir. So I see why people like that one. I think the valuation is too high, but I would love to get that one. My granddad, who I am last living, had bought 700K of Coca-Cola and still has them. Yo, Coca-Cola is pretty much at all-time high. I actually own the Coca-Cola bottling company. Actually, here you can kind of see I've been buying the dip on this one. I like being fully transparent. But someone said, what's your year-to-date return? Here, you know what? For this portfolio, it's actually really good. There's the all-time return. But year-to-date, on a return money weighted, which is what you want to look at, we're up 39%, which is crazy. But that's our best performing portfolio. You know, this one right here, year-to-date, it's still better, but we're up 9.22% year-to-date. And in this account, we literally just started this Roth IRA. We're up 12 in here. And then finally, this portfolio, let's see, P&L, yep, year to date up 23%. Pretty cool. So, hey, we got some dividends as well. Let's see. I mean, hey, y'all like this, please hit the follow button. I feel like no other YouTuber shows this or streamer. I like being fully transparent. I don't got nothing to hide, really. We do have some big losers in here, though. That's why we've actually underperformed total return. Look at this. We're only up 13% year to date, so we've definitely underperformed. So anyway, let's keep going here. Look at some more y'all stocks. Yeah, if you got any stocks you want to look at, let me know. And Jack said Oscar Health. Let's check it out. Oh, hey, Hunter, we'll look at AT&T. Remind me to look at AT&T. I want to look at them too. They've actually been performing very well ever since the spinoff. But here's Oscar Health. This is your Medicare, Medicaid play that's really taken market share. But again, we saw what happened to United Health and CNC. The government regulation is not in their favor. It's really coming for their margins. So here's the good news, though. This is the most impressive part about Oscar Health and why I think this one is pretty good. Maybe even better than UNH. It's just the growth. I mean, how do you pull this off? You know, for the full year 2020, it was $580 million of revenue. Now it's $9.2 billion for the full year 2024. Literally just in the past 3 months, it's $3 billion, up 42% from the previous year. I mean, I don't know how they pulled that off, but extremely impressive growth. Net income's getting a little better too. I expect by this time next year, though, when you average out the 4 quarters, they're going to be making net income every quarter. I mean, it already grew 55%. So Oscar Health, besides the government regulation that's really hurting them, I do like that one. Value investing is gone. What up, PSN? Good morning. He said RTX. Yeah, Raytheon, man. I love RTX. This is your aerospace and defense play. So if you're looking for an aerospace and defense stock, this is one of my favorite picks. But of course, the sector has been really hot and they're pretty much at all-time highs. Yo, Plasma, I am streaming on TikTok, but on my second account. I'm streaming on YouTube and TikTok right now. So check this out. This company owns Pratt & Whitney. And actually, if you want to follow my second account, it's Stocks Live is the name of the TikTok account, my second one. But anyway, look, Collins Aerospace, and also here's Raytheon. So these are all great aerospace and defense companies, lots of contracts with the U.S. military. And look at this. They're making a lot of money, 1.5, 1.7 billion in net income every quarter. And you get a dividend. Look, even though the stock's at all-time highs, you're getting a near 1.7% dividend yield. So pretty cool. Ooh, here's a cool one. Well, we got to look at PANW after this. I want to look at Palo Alto Network. So, yeah, hey, Jack, they just took down, I'm on my second account because TikTok took down my stream on my main account and it's getting appealed right now. So it's whatever. Hey, if y'all wanted the follow button, I appreciate that. So if you want to support me, best way to support me is go to my YouTube channel. It's I'm streaming on YouTube as well. Someone said, what app is this? Hey, also, if you go to the link tree in my bio and you want to get this app that I'm on, it's actually a brokerage. So this is a brokerage that I'm on if you want to get it. It's my favorite one for analysis. It's also in the link tree in my bio. It's the very, very first link there. It's free. It's an affiliate link too. So anyway, here's AT&T. Obviously, this is been actually a decent performer. I mean, look at this. This was just $15 and now it's 30. So it's actually doubled in a year. I mean, pretty impressive for AT&T. And they cut their dividend, but it actually worked ever since the WBD spinoff. I mean, you get a 4% yield here. So 1% of your money back every quarter. If we go to where their revenue comes from, obviously we know what they do. Hey, we use AT&T on my phone. So anyway, look at this net income. They had a little one-time adjustment that one quarter from the spinoff, but look, they're pretty much making $5 billion of net income every quarter. So then they just return a lot of that to shareholders. The free cash flow is a bit better. Like, all right, let's actually see. So look, they made $4.86 billion of net income just in the most recent quarter. Let's go see how much exactly their dividend cost every quarter, just for fun. So here's how much the dividend cost, just over $2 billion every quarter. So the dividend costs $2 billion. They're making $4 billion. So they have like a 50% payout ratio. They actually have room to raise their dividend and pay off debt and stuff. So, hey, that one's actually a pretty sustainable, higher yielding one. Not too shabby. Yeah, AT&T pays qualified dividends, so I wouldn't mind holding it in a taxable. But yeah, AT&T could be good in a Roth IRA as well. Yo, what up, Soy? Hope you're doing good, man. BMNR, yeah. Oh wait, PANW, and then we'll look at BMNR. I want to look at all these. And what up? He said, COUR. Is this a normal year of returns for you? Not really, Sean. We've had a really strong year. Uh, yeah. So here's Palo Alto Networks. This is one of my favorite cybersecurity stocks out there. And you know who actually owns this stock? The everyone's favorite super investor, Nancy Pelosi. So we can actually see Nancy Pelosi, her portfolio, she has to make all her trades public by SEC law. And so we can view them on this app here. And let's see, where's PANW? So yeah, 2% of her portfolio is in PANW, Palo Alto Networks. And check this out. This is the kind of company that you really just want to buy and hold for the long run. You don't really have to worry about this stock. So check this out. Most of their revenue comes from their subscription revenue. And I love subscription model companies. And look at this growth. I mean, the subscription revenue just hits a new record every single quarter, every single year. So this is all recurring revenue, usually high margin. We can see where the revenue comes from as well. 63% in the US, and they got some international exposure, which is pretty cool. I mean, cybersecurity is just always going to be in demand, especially as AI gets better, hacking gets better. And look at the net income. I mean, it's technically a little suppressed right now, but they're basically making a couple $100 million of net income every quarter. Free cash flow is even better. They're making over $2 billion of free cash flow a quarter. They have a bit of stock-based comp, so that's why the net income's lower than free cash flow. But still, I love them. I think they're going to be a winner in the long run. Might be worth looking at the dip. So what was that one stock? Garmin stock. What's the ticker symbol? You know, I'll type it in for you. So GRMN. Let's check it out here. So a $42 billion company. So that's a pretty big market cap. Let's see. They have a dividend, a 1.44% dividend yield. So 1.5% yield. The PE is a 27. Pretty fair valuation. And here's what they do. They're in fitness, outdoor, marine, and aviation. How's the aviation business doing? It's up 15% year over year. Fitness, wow, the fitness revenue is up 41% year over year. So, hey, the business is growing. So if we go to revenue's up 20% year over year. Net income's up 33. Yeah, they're making like 400 mil of net income a quarter. That's really good. Free cash flow is falling a bit, but probably just from investments. Let's see. Yeah, so not bad. Hey, everything looks really good balance sheet, man. Wow, really good balance sheet. So I actually like Garmin a lot. Everything looks good there. RXRX, yeah, hey, that's a company I would stay away from. So, and I'll be really quick about this. So if we go to Nvidia's portfolio, Nvidia actually owns the stock. So that's why probably a lot of people like RXRX because Nvidia owns part of them. But this is one that I would stay away from. And, you know, I don't want to just be bullish on every stock. This is one I'd be careful with. They're a $2.5 billion company. And here's the thing. $2.5 billion market cap. And look at this. Like the first off, they only made 14 mil of revenue. So 14 million of revenue in the most recent quarter. And look how much they're losing. $200 million just in the most recent quarter. I mean, that's nearly 9% of the entire market cap. I mean, just in the past year, they've lost, 20% of the entire market cap in net income. Luckily, their balance sheet's doing good because they've been able to dilute you a bunch, but still, it's tough. ARK is the largest shareholder, though, ARK Investments. So that's and Nvidia owns a little bit of them, but still, that's not one I like too much from a financial point of view. Doesn't look too good there. Check out Verify. What's the ticker symbol for that one? I'll check it out for you. AMCPX. I hope I can find, these are some weird ticker symbols. I don't normally look at these because they're probably like a really low, yeah, it doesn't exist. That's unfortunate. So let's see. What up, Barilla? He said GTLB. That's GitLab. Let's see. GTLB. So let's check this one out. So the stock actually hasn't done too good. It's actually, yeah, look at that. It's the same price that it was back in 2022. So the stock has not done too well for some reason. Let's see how the revenue's doing. So they met on revenue. They missed on net income. So kind of the orange line is what the analysts were expecting. They missed on net income. They beat on EBITDA, though. So looks like their net income struggling a little bit, but still the trend is getting better. Let's see revenue. So revenue's up 26%. I mean, that's still really good growth. So 26% revenue growth. They're probably by this time next year, they're going to be net income positive. They are deleveraging. So actually not too bad here. It might actually be in a buy the dip territory. I don't know about the valuation, but yeah, it actually looks pretty fair here. VRME, let's check it out. Yeah, Hunter, I might not just be able to look at it on this app right here. Maybe it's like an Australian stock or something. I might not be able to look at it. So verify me. First off, this is a really risky company. If you look how much the whole company is worth, 15 million, that's what you got to be careful with. So that's a very small market cap, only worth $15 million. But let's go see how they're doing. So yeah, they're losing money every quarter. Not great. What's the revenue? They better have revenue. Revenue is 4 million and the revenue's down 22% year over year. So nothing's really blowing me away here. I mean, they did just beef up their balance sheet, but must have been from diluting shares. Let's see. Yep, they issued 4 mil of shares, but not much. Anyway, I'd be really careful with that one. Still a $15 million market cap, just not the kind of stock for me. That could be a fun trade though. Kathy Wood likes TER. Yo, actually, let me go to the Kathy Wood portfolio really quick because we can also see on this app right here, Kathy Wood's portfolio. They got a lot of portfolios in here, but let's see. Kathy Wood's portfolio. So her portfolio in the past 250 days is up 67%. So hey, that's pretty good, right? So let's pull up her portfolio. Sorry, my Wi-Fi is bugging right now. Kathy Wood's portfolio. There we go. So yeah, she has Tesla, obviously. Dude, Roblox has been crushing it, man. Roblox has been a great performer. Coinbase, Robinhood, dude, Shopify. She owns Circle and AMD. I didn't know she owned AMD or the ETF. But here's what I love about Shopify, man. I'll quickly cover Shopify because I just love this company so much. They're so growthy. Like if we just go to the revenue growth right here, this is the best part about Shopify. I mean, you can't make this up. They're so growthy. I mean, 2019 revenue was 1.5 billion. Now it's 8.88 billion. So it literally just hits a new record every year, every quarter. So incredible. I mean, Shopify is just a growthy company. And also look at the FCF, which stands for free cash flow. They're making a lot of free cash flow every quarter. They technically had a one-time adjustment. They're making net income every quarter, at least 100 mil. So Shopify is really cool. But we can also look at TER. What's a decent stock market for beginners? Like stock market? I like the U.S. stock. U.S. stocks I like. Just for tax simplicity. If you're in the U.S., then I just buy U.S. stocks. Oh, we can look at HIMS as well and UNH and Redwood. So let me look at Teradyne real quick, then we'll get to those. So here's this company, a $16 billion market cap. Looks like they were jumped up on earnings. Semiconductor Test. So that revenue is up 25% year over year. So it looks like that's doing good. That sounds niche. Product Test, how's that doing? Well, anyway, let's just go down here and see the revenue. So revenue actually fell 10% year over year. So, and the net income fell 55% year over year. They have a really good balance sheet. Did that meet expectations? So that's right about what the analysts were expecting. So, hey, the stock went up on that news. Maybe it was oversold or something. Maybe they gave good guidance. I don't know. Someone also said Nvidia owns part of that, or Kathy Wood owns some of that. So let's see. Sean said ANTE stock. Let's check that one out. Let me get a sip of my tea real quick. ANTE. So let's see. AirNet Technology. So yeah, again, a really small company. I like to usually stay away from these. We don't really like to cover these kind of stocks, but a $55 million market cap. Looks like the stock has been doing pretty decent the past couple of days here. But again, like, look, stock's pretty close to all-time lows. So they're a $50 million company and revenue's down 83% year over year. I mean, revenue has collapsed and they're losing 20 million of net income a quarter. If you're wondering, whoa, why did the net income? Oh, that's 2015. Oh my goodness. So yeah, anyway, geez, I'd stay away from that one. Just a really small market cap. RWT, is this another, I think Redwood Trust. Yeah, so another really small one, a $700 million company. Let's hope there's something we can find good here. Do they pay a dividend? Yeah, so this is probably why I'd stay away from this one. It looks like a dividend trap, a 12.6% dividend yield, but look at the payout ratio. Payout ratio is a 200%, so not great. Let's see if they can afford the dividend. So Sequoia Mortgage, so yeah, this is a mortgage REIT. And looks like, I don't know how this is possible, but the revenue went negative. Like the revenue, not even net income. I don't know what really happened there. And they lost 100 mil. I'd be really careful with this one. A pretty leveraged balance sheet. So anyway, I don't know if they can really afford that dividend. I'd be careful. Well, let's go look at HIMS as well. We'll look at Weeble too. Yeah, that's a cool stock. And here's HIMS. So a lot of people think this is like a meme stock, but here's what I really like about them. They're extremely growthy in terms of like revenue growth and margin expansion. So if we head over here to their revenue, I mean, this is what I love. This is why I don't think they're a meme stock and they deserve the hype. I mean, the revenue's up literally 110% from the previous year. I mean, incredible growth on HIMS. And we can see they're beating the analyst expectations by a crazy margin. I mean, look at the FCF, which is free cash flow, up 3x year over year. Net income's also up 3x. They're going to be making over 200 million of net income and free cash flow a year. Really strong balance sheet. I mean, just look at the cash from operations. Went from 25 mil to 109. I mean, just crazy good growth. So still got to be careful. They just lost their partnership with Ozempic, so they no longer sell any weight loss prescriptions, which was leading to a lot of their growth. But yeah, it's probably all priced in at this point. They sell some other stuff. What's your favorite cyber stock? I like CrowdStrike and PANW. What app are you? Yeah, hey, Brendan, this is actually a brokerage I'm on. So if you want to get this brokerage I'm on, it's my favorite app for analysis here. It's free. It's in the link tree in my bio, very first link there. So anyway, here's Weeble right here. So I actually use them as well. Again, I use all these different brokerages, but this is my favorite one for analysis. But here's Weeble. I've probably given them a lot of fees before. Here's my Weeble account. So I've given them a lot of fees before. And here's their stock right here. So let's see how they're doing. This is the good news that they are making net income in the 2 most recent quarters. So check this out. They are net income positive. They did just IPO a couple months ago, but they're also growing their revenue up 31% year over year. So I remember reading their like 10K. Their share structure is a little weird. Like they have like class B and C shares, but I got to do more research on them there. I know they're Chinese too, but yeah, I look like they're making net income. So they're profitable business there. Any good calls right now? Or, oh, I don't know about calls. Yeah, I don't know, man. Is Fig overvalued? So yeah, Figma just IPO'd. So they had a really good IPO. I'll show you that real quick. FIG stock. So remember, Robinhood was like begging me to buy the IPO, and I just chose not to. So let's see here. Dang, dude, this Wi-Fi is not working with me. Dang, man. This never happens. Okay, so look at this on the 5-day chart. This is where they IPO'd at. They IPO'd at $32, and now here they are at $122. So I know like some app developers use Figma and stuff, but look at this revenues. This is kind of the only data we have since they just IPO'd. But look, the revenue went from 156 to 228, an increase of 50% year over year. So looks like that's really good growth, and they're net income positive. They made 44 million of net income on that. So what's the margin here? I am really curious here. A 20% net margin. So that's really incredible. 91% gross margin. So they must have some really nice application. They're in Canada, but don't do Canadian option. I'm gonna go. Hey, what up, Arwayne? Hope you guys are having a good Sunday. Someone said, check out TRAK, Track. What's Track stock? I guess let's check it out real quick, see how they're doing. And then we can look at Open Door. Do you think Figma will end up like Circle? I don't know. Circle's so unique. They're the USDC stablecoin issuer. I don't know what Figma does. I still got to look into them. But anyway, this is TRAK stock. If you look, this looks pretty risky. They're only worth 290 million. So the whole company is worth 298 million. Let's see. The good news, they're making net income every quarter. Look at that. They're making like 2 million of net income every quarter. So that's actually really good news. And I think the industry that they're in, let me actually see. A software service provider. So they're a software service provider with a really good balance sheet. Wow, no debt, lots of assets, lots of cash. I mean, this is actually pretty good. I mean, they're making net income every quarter. Net income's growing, revenue's growing double digits. They're on my watch list as well. I didn't even realize that. So, hey, Track, I actually like them. Even though they're a really small market cap, you got to be careful. I do like that. Let's see here. Yeah, hey, this ain't financial advice. I'm not an expert. I don't sell nothing either. I don't have a course, book, Discord, WhatsApp. Watch out for people impersonating me. So let's see. Open Door. This is one I'd also be really careful with. I think there's just a lot of hype around the name. Oh, yeah, we can look at Coinbase as well. And some ENA stock. Or ENA, is that a crypto? I don't know. Maybe it is. We don't really look at crypto here, but here's Open Door Technologies. This company is pretty much begging for a lower interest rate environment. But here's kind of why the stock went up so much. Some super investor basically came on CNBC and was pumping it, saying this is like a 50, 80x stock. And I just don't believe it, man. I mean, there's a real chance of bankruptcy. So before this hype, this was a smaller company, closer to like $1 billion, but let's not give them the benefit of the doubt. So right now, Opendoor is a $1.5 billion company. Well, if we go to the net income, they're losing roughly 100 million of net income every quarter, closer to like 90 million, but they're losing 90 million. That's 400 million a year. They literally lose 40% of their market cap in net income a year. So I just can't trust my money with this company. Like this company's begging for a lower interest rate environment. Like look what happened in 2021. The revenue boomed 5 billion. And look at it now. Look at these year-over-year declines. I mean, it's tough. So this is one I'm just staying away from. I mean, there could be a fun swing trade. I don't think that's a good buy and hold forever kind of stock. Yeah. Let's look at Coinbase here. This is yeah, dang, they fell 17%. I didn't realize they fell so much. Here's kind of a cool stat I like to see. This is their active users, or actually look at this, monthly transacting users. So that might be why the bad news, it went down. Actually, it's still up year over year. So actually, that's no big deal. So 8.7 million monthly transacting users is pretty cool. They missed on revenue. They beat on net income and missed on EBITDA by a huge miss on EBIT. That's actually might be why the stock is down so much. So yeah, the revenue only grew 3% year over year, but it was up 100% from the previous year. So it's good that they can keep that. The net income was really good, but it looks like that was some sort of one-time adjustment because the actual operating profit was negative. So yeah, I can probably I can understand why they probably fell so much, but yeah. Yor said, what app is this? Hey, yeah, this is actually a brokerage that I'm on. It's my favorite. I use, all these other brokerages here, but yeah, if this is Moomoo right here. If you want to get it, it's in the link tree in my bio, the very first link there. Free brokerage, lowest fee, my favorite one for analysis and stuff. So yeah, let's keep going. Coin put me in the negative for the year. How is that possible when crypto's at all-time highs? Yeah, I feel you, Sean. That's unfortunate, man. So what? Oh, VRT stock. Let's check them out. Is Robinhood overvalued? Yo, I own some Robinhood as well. We can check them out too, and we can look at NTLA, Arista Networks. I'm skipping past these stocks. I apologize. Remind me to look at Arista Networks and NTLA. I want to look at these. So here's VRT. This is like the second largest nuclear play out there. CEG is the main one, but basically, I'm thinking of Vistra. Wait. This is Vertiv. I'm thinking of Vistra. Okay, sorry. So this is Vertiv. I think this is like I don't even know, something AI. But look at this. First off, let's judge them from the financials. This is really good. The revenue grew from 1.95 to 2.6 bill. It grew 35% year over year. And look at the net income. The net income grew 82% year over year. So what does that mean in English? They're expanding their net margins. Net margins grew by 34% year over year. They're making 300 mil of free cash flow a quarter. Vertiv is really doing good. 80% of the revenue comes from their products. Yeah, look at their products revenue, up 39% year over year, literally to a new record. So Vertiv's crushing it, man. I can see why they're at all-time highs. So let's look at ANET, Arista Networks. I love this company right here. So they've actually been doing pretty good. Look at that. Pretty close to an all-time high. But let's go look at their financials because that's kind of what matters here. So let's see. Products and services as well. But let's see. Net income. Yeah, look at this net income. That's crazy, man. It just hits a new record. 800 million of net income just in the most recent quarter, up 30% year over year. Revenues up 27%. I mean, this is just an extremely growthy company, extremely profitable company. How's the free cash flow doing? That's what FCF stands for. Yeah, dude, geez. They're making like $3.5 billion of free cash flow a year. So yeah, product revenue is 85% of the business. And I want to pull that up if it'll work. Yeah, hey, Allo, sorry. If you want to get this this isn't an app, or if you want to get this app that I'm on, it's actually a brokerage. It's in the link tree in my bio, the very first link there. Favorite app for analysis and stuff. It's free. It's favorite brokerage. So anyway, yeah, product revenue's up 30% year over year, really good. So anyway, I like Arista Networks. They're extremely profitable, very safe company in my opinion. Lululemon and KOS. Let me look at KOS and we'll look at Lululemon. So this is Cosmos Energy. So yikes, this company is close to an all-time low. So they're only a $900 million company. So the whole company is worth 900 mil. So yeah, look at that. Here's kind of the bad news. So they used to make net income every single quarter, but in the most recent quarter, they just lost 110 mil. So not great. And that was real. They really did lose that net income. Geez. So that kind of, just by looking at the financials, it kind of explains why the stock has done really bad. So yeah, I'd be careful. They can't really keep up those net income losses, but they don't pay a dividend. So that's the good news. Oh, and Lululemon. So yeah, Lululemon, man. This is the clothing company. You know, they sell like leggings and shorts and stuff. And look at them. They're slowly bleeding out. They had earnings. Look at this. So they gapped down on earnings right here. And then they just continued to bleed for another 10 days, had a slight recovery, and then continues the bleeding. So that's really unfortunate for Lululemon. What's the PE? The PE is a 13. So this is like a commodity multiple, and they just sell a commodity really, clothing, shorts, and stuff. But we can see their number of stores. This is kind of cool. 770 stores. Comparable sales, yeah, only 1%. Not great. So here's also the other bad news. So just think about this logically. Yeah, hey, it's Leo. This is my second account. They took down my main account. So anyway, 7.3% revenue growth. But look at the net income. It fell by 2%. So what does that mean? That means the margins are collapsing by 9% year over year. So they also leveraged up a little bit. You can kind of see went from 38% to 42. Not the trend you want to see. So I think this one at the end of the day is still oversold though. I know they have a lot of pricing power. They sell like a premium product. So I do like them, but I don't know if it's tough. So thoughts on how tomorrow's gonna go? Yeah, man. Hey, by the way, we're gonna be streaming later tonight. So in a couple hours, 5, 6 hours from now, we're gonna be doing another stream. So make sure you turn on notifications, hit the follow button if you want. Thoughts on STAK Inc. What's the ticker? Oh, here we go. STAK. So first off, man, this looks really risky. The whole entire company is worth $18 million. So I don't really like to cover these kind of stocks just because they're so small. But let's see. Sales of specialized oil field equipment um vehicles. So it's like an oil and gas related stock. Let's see the revenue. They are making net income every quarter, so that's kind of the good news, but it's just such a small company. I'd be really careful here. What country do they operate in? So it's all the revenue comes from China. So it's a Chinese company worth 17 mil, just IPO'd. I'd just be careful with that one. Let's see. Oh, FIX stock. Hey, that's actually my biggest winner. I won't spend too much time on this one, but this is ticker symbol FIX. This is my biggest winner of all time, my largest holding of any other stock. And this is the kind of company I want to own. This is the EPS right here, the earnings per share, and it's just the net income per share. So look at this right here. You can kind of see the net income grew 72% year over year, and the EPS grew 74% year over year. That's because they also bought back 2% of the company. So anyway, the growth is just immense here. After the EPS grew 93% from the previous year. So look at this. If we kind of zoom out to the previous year, it went from $1.93 to $3.74. Now to $6. I don't know how they pulled this off, but it grew again 75%. They keep on growing their net margins 43% year over year. Everything about this company is growing, deleveraging. So they just check every box. They've also risen their dividend for every single quarter for 4 years in a row, 4 quarters in a row. I mean, just crazy. So what is Bombadier? What's the ticker symbol for that stock right there? I'll check it out. Yeah, and at 8 p.m. tonight when I stream, the market will be open. The overnight market will be open, so we'll be able to kind of see how they what we're doing. What app is it? Yeah, hey Sonny, this is a brokerage right here. If you want to get this brokerage that I'm on, it's in the link tree in my bio, the very first link there. It's my favorite one. You know, I use Robinhood as well, but you know, you can't really analyze stocks in here. And anyway, this is my favorite one, lowest fee, free app. So anyway, free brokerage if you want to get it. Link tree in bio, first link there. It's an affiliate link too. Both get some free stocks. So anyway, oh yeah, Robinhood stock. So ticker symbol Hood. So this is another brokerage. So here's my Robinhood portfolio as well. Main taxable account. I've given them a lot of fees. So check this out. Robinhood stock is nearly $100 a share. They are so innovative, so growthy to where they deserve it. Honestly, they're a bit overvalued right now, but they crushed earnings. They beat on revenue by a huge gap. Analysts were expecting 913 mil. They reported 990. Their earnings per share was expecting 31. They reported 42. It was a triple beat, incredible quarter for Robinhood. Revenue grew by 45% year over year. Net income grew 100% year over year. Look at this. I mean, Robinhood's making a couple hundred million of net income every quarter. So, and Robinhood is actually my best performing stock of all time, and it's the stock I regret selling. I only have 5 shares left. I regret every share I've ever sold. But yeah, we're up a crazy 615% on our Robinhood shares. So yeah, Robinhood, man, such an innovative company right there. They are a bit overvalued, I would say, but they deserve it because the fundamentals are so good. The growth is so strong. Yo, Adrian, what's up, man? Hope y'all are having a good Sunday. Yes, sir. BBD. Let's see, BBD stock. So wait, Bombardier. Okay, so this is a Canadian company. So I like this isn't even available for me to trade, but let's see. What's the company worth? A $16 billion company. That's pretty good. Most of the revenue does come from the US. That's interesting. Revenue fell 7% year over year. But the net income grew. Look at that, 200 mil of net income. So it's not bad. They're making net income every quarter. A bit leveraged. They got more liabilities than they have assets. Are they investing? Yeah, so they're investing quite a bit. So anyway, I wouldn't own this one for tax reasons. I mean, but because I'm in the U.S. But I mean, everything seems strong there. Check out Nebus. Hey, yo, I regret I sold Palantir as well. I sold it a long time ago. Y'all won't believe where I sold Palantir. Like before it was $10. Anyway, let's look at Nvidia right here. If we go to Nvidia's portfolio, we can see all the super investors' portfolio. Nvidia has to make their portfolio public by law. Well, one of the stocks Nvidia owns is Nebus. So there's only one thing I really like about this company. I wouldn't just own a stock just because Nvidia owns it, but I love this one for the growth. I mean, look at this. The revenue is up from 11 million to 55 million. As long as I can keep up this growth rate, I mean, that's incredible. And also, do got to be careful. I don't know if I'd buy this one. Just these losses of net income kind of scare me. They're losing 100 mil of net income a quarter, but as long as it can keep up this revenue growth rate, I mean, it's probably worth it. So yeah, Nebus is interesting. Part of the Nvidia portfolio. I regret selling most of my Palantir. Oh, okay. What up? So BMNR. What's this one? BMNR stock. Bitmine Immersion. So I think this is that Ethereum mining company. So this company just mines Ethereum or something. So yeah, look at that. Revenue from self-mining is 91% of the revenue. I think it's either Bitcoin or Ethereum. I'm pretty sure it's Ethereum. So this is basically an Ethereum proxy. But look at it's 2 million. So the revenue did grow 67%, but it went from 1.2 to $2 million. Anyway, no chance of bankruptcy here. Not financial advice, but anyway, I think that's just a Bitcoin kind of proxy. Yo, what up? Let's see here. Kevin, what's up? Sorry, I didn't see this. He said, can we look at Nike stock? Yo, I actually sold out of Nike a while back, pretty close to a similar price. I sold all my Nike up here at $79. But let me show you why Nike has been struggling, especially if you go to the weekly. And I think the worst is over because they just brought back all their partnerships with like Foot Locker and all these retailers. So I think that's going to help them out tremendously. But here's the bad news about Nike. The business has just lost all growth. I mean, if we look at the revenue, it's down 12% year over year. So the revenue's down 12, but the net income is down to 85. They couldn't even afford the dividend by far. So the net income fell 85. That means their margins collapsed. So and it's kind of scary, but the net margin was only at 1.9%, down 84%. So we kind of want to see the margins come back. And remember this, they made 200 million of net income just in the most recent quarter. We go to the cash flow statement. Let's see how much the dividend cost. So the dividend every single quarter costs 600 million. So Nike has to literally make 600 million of net income a quarter just to pay the dividend. It's rough, man. It's rough. Hey, if you go to the link in the description, you should be able to see the brokerage that I'm on. But if Rohan, if you go to the link tree in my bio, if you go to the link tree in my bio there, the very first link, you can get this brokerage that I'm on right now. It's my favorite one for analysis and stuff. So yeah, Nike, they need to make at least 600 mil a quarter, and that's kind of the thing there. The dividend's at risk. Anyway, let's see here. What is this? Oh yeah, this app. Yeah, hey, sorry. Yeah, if you want to get this app again, it's a brokerage. It's in the link tree in my bio, very first link there. My favorite brokerage for doing analysis, lowest fees. Because I have all these. There's no harm in having multiple brokerages, but I use all these other ones, and they don't really have much useful tools. Like Robinhood right here doesn't really have any useful tools like this one does. So, and I keep my cash in here. Look, I got $695 of cash in here. It earns you daily interest, and you get just keeping your cash. Anyway, sorry. If you want to get the app link tree in bio, it's an affiliate link too, so it'd help out the channel. But anyway, let's keep going here. SPHR, are they making any money? So has anyone heard of the Las Vegas Sphere? Anyone seen those huge spheres before? Well, it's like a huge digital screen. Well, that's actually owned by this stock right here, ticker symbol SPHR. And unfortunately, they're just not making much money. So yeah, you kind of see this Madison Madison Square Garden, and then Sphere revenue. So you can kind of see they just opened it. If y'all probably remember, not that long ago, like in 2023, they opened it, and ever since then, the revenues exploded. So obviously, it went from literally nothing to 150 million. But here's the bad, and it's probably going to improve in the future. But for right now, I mean, they lost 130 mil just in the most recent quarter. That's not great. They're losing a lot of money right now. But yeah, it's like I don't know if I'd own that one just because of the mixed bag here. So maybe in the future though they could get profitable. I'd like to see that because there's just a lot of stocks like that, like the Las Vegas Sphere. Is it PAR? Or maybe it's PRKS. Oh yeah, United Parks and Resorts. So this is a really cool company actually. This stock right here, PRKS. Let me see what they own again. I think they own like SeaWorld, Legoland, yeah, SeaWorld, Discovery Cove. I don't know, a lot of parks and stuff. Here's kind of another one. Kind of like that, but oh, and then there's also one more. IMAX, and I actually, out of all of them, I actually like IMAX. Has anyone seen those like big movie screens? IMAX is also a publicly traded stock right here, and I think they are making net income every quarter. Yeah, look at that. I mean, it's not huge, but look, they're making a 12 mil in the most recent quarter. There's a lot of random stocks I didn't know were public. Like here, if I go to the zero debt watch list right here, here's my watch list of all stocks with zero debt. Like the Opera GX browser is public, Yelp, DocuSign, Duolingo, incredible company, Pinterest, Instacart, Maple Bear, Celsius, Reddit, GameStop. I mean, pretty cool. Anyway, let's keep going here. Back to the stock analysis. Yo, Cozy, Real Cozy said CMG stock, Chipotle. Yeah, man. So Chipotle just unfortunately had some not so great earnings. Oh, yo, Tommy, we'll answer that question next. What's up, man? Happy Sunday, by the way. So Chipotle, unfortunately, yeah, look at this. They gapped down on earnings and then they slowly kept on bleeding since then. So let me actually see what they reported. So yeah, if we kind of look at the orange line, this is what the analysts were expecting. They missed on revenue, missed on net income just barely, but they beat on EBITDA. So it was kind of a mixed bag here. So the revenue is probably investors didn't like the slowing growth. I mean, the revenue only grew 3% from the previous year, and the net income actually fell by 4%. So that means the margins fell by 7% year over year. They leveraged up just a tiny bit. So I don't know. I think investors just wanted a little more growth out of Chipotle since they do have quite a high PE. So just buy silver and platinum. Hey, it's like a SLV, I think is silver, SLV. But I like owning stocks and assets that give you a yield. Like you don't really get a yield with silver or gold, but like I love McDonald's. Someone said, what's some of the safest stocks? To be honest with you, like these companies right here, like McDonald's, these are the stocks that I own. So I might be biased, of course, but yeah, this is what I own. So I put my money where my mouth is. I got 19 shares of Google, 5 Meta. I love Meta. McDonald's, Constellation Energy. So yeah, stocks like that. And then I also have some other stocks in here. Amazon, you've probably heard of. DocuSign, I got a little bit of. So let's see here. Can you analyze Amazon? Yeah, we can look at Amazon too. And Walmart's pretty good too. So you know what? Here's Amazon right here. They basically showed some slowing AWS growth, but it doesn't really bother me because they still had outstanding results. You know, like if we look at the revenue year over year, this actually beat my expectations. So the revenue grew 13% year over year, and the net income grew 34%. So another great quarter of growing their margins. They now have 10% plus net margins. You know, if we zoom out, it used to be a tough business. You know, single digit margins, but double digit margins now. That margin expansion is crazy. I think investors didn't like this free cash flow number. So look, Mag 7 company, free cash flow is negative 8 billion and only 300 mil this quarter. Why was the free cash flow so negative? Well, all you got to do is scroll down here to the cash flow statement right here, and you go to the cash from investing activities. They literally invested 40 billion just in the most recent quarter in like new assets, you know, just either acquiring new companies, investing that money, hopefully to get a good ROI. So yeah. Yo, Luffy said thoughts on Berkshire Hathaway earnings. So yeah, if we go to BRK right here, Berkshire Hathaway, BRKB is the one we'll look at here. So Berkshire Hathaway didn't have great earnings, if I remember, but I love some of the assets that they own. So yeah, look at that. They are quite a bit off all-time highs. the S&P is still pretty close to all-time highs. But yeah, they're a huge insurance company. They own Geico. So you heard of Geico before. That's a lot of their revenue. They own some railroads. They're just a very diversified business. They own a lot of stuff. And yo, George, no way, George. Thanks so much for the gift there, the summer sun gift. I appreciate that, man. Yo, you got a stock you want to look at? Let me know, George. I appreciate you. So yeah, I love how diversified Berkshire Hathaway's revenue stream is, but I think this is what investors didn't like. It looks like they only made $5 billion of net income, down 63% year over year. So I do think investors were a bit spooked by that. The margins kind of fell, but they invested $16 billion though. Anyway, Berkshire Hathaway, that's still it's like an S&P 500 alternative. Your analysis is straight to the point. Hey, Kudo, thanks so much, man. Yeah, if you want to hit the follow button, subscribe, I'd really appreciate that. We're also going to be streaming later tonight. So around 7, 8 o'clock Eastern time, we're going to be streaming again. So if you want to hit the follow button, turn on notifications. We'll be streaming later tonight. And I sell nothing, by the way. I don't have a course, book, Discord, WhatsApp, Telegram, literally none of that. I'm just on here to give my opinion. And if you want to support me, then you can hit the subscribe button. B just said, do you have any shorts? I do not have any shorts right now. I don't actually have any options right now. So here's Walmart. Someone said, how safe is Walmart? What's up, Michael? So yeah, Walmart is one of the safest companies. I mean, even in a recession, people still got to go to grocery stores, and they have one of the biggest logistics and real estate portfolios like ever. It's crazy good. I mean, their logistics network is why they can compete with like Amazon delivery, because like 72% of their stuff in the stores, people can order online. Anyway, if we go to the net income here, I mean, they're just printing money. I mean, look at that. They're making like near $5 billion of net income a quarter, get a near 1% dividend, recession resistant. So I do like the grocery store sector. I kind of own one of their competitors. I actually own like a healthier grocery store, and I still love them. I still love Walmart. But I actually own Sprouts Farmers Market. Oh, hold on here. Yeah, there we go. Sprouts Farmers Market. It's like a healthier grocery store. I got 7 shares of them right here. We're up 13% on them, which is pretty cool. So let's see. Connor said UMAC stock. What is UMAC? Let's check it out real quick. And then OKLO as well. Yeah, we can look at Oklo. That's the nuclear startup company right there. So anyway, Unusual Machines. So this is a $266 million company. So first off, you got to be very careful with that market cap. It's a very small company. So let's see how they're doing though. So revenue, those net income losses didn't look good. Come on, revenue. So yeah, 2 million of revenue, not much. It did grow year over year, but still 2 million of revenue. And they're losing not much. I mean, they lost 3 million. They have a decent balance sheet, but the assets are declining. Like, look, they lost 27 million this quarter, so that has to take a $27 million impact on their assets. So it's just such a small company. I would just be careful with UMAC. You think Walmart price will go up? Probably in the long run, yeah. It should probably return like 5-6% a year. So let's see here. OKLO, yeah. So this is the nuclear startup. This is like a main nuclear momentum company, but I personally would go with it. If you're looking for a source of nuclear, I wouldn't go with OKLO simply because if we go to the revenue right now, this is still a revenue-less company. It says no data because they've never sold anything, not a product or a service, and they're losing a little bit of money. But I would rather go with one that already has a bunch of nuclear reactors, like a CEG. They already own 50% of all the U.S. nuclear fleet, so pretty good. Let's see. Adam said, can you look at OSK stock? Yeah, what's OSK? So this one's on my watch list, actually. So there's something that interested me of this company in the past. So let's go find out. So first off, the PE is a 13. So that's the net income multiple. The net income multiple is a 13. And they're in Access Vocational. How's the Access revenue doing? So that did fall 22% year over year. Vocational, look at that one. That's up 12% year over year. And then Defense, that fell. So it's like a mixed bag, some growing, some not growing. But if we go, they just got into 2 large government contracts. Oh, are you talking about Oklo? That would be interesting. So yeah, anyway, if we go to the net income right here, they're making a lot of money, like 100 to 200 million of net income a quarter. Net income grew 21% year over year when the revenue fell 4%. So that means they're really growing their net margin. Let's see that. Yeah, look at that. They really bumped up their net margin right there. Pretty good. So it's like a mixed bag. Like that's probably why the stock is the same price that it was back in 2021. So nothing extremely growthy there, but pretty good. I love that net income number. Did you do United? Yeah, we can look at United Healthcare as well. Someone said uranium. Yeah, we'll look at uranium too. Go to ticker symbol URA. That's like the uranium ETF. But I'd probably, if I was going with uranium, I'd probably go with some individual ticker symbols like a CCO. So here's United Health Group. I feel bad if you own this one because this one's just been slowly bleeding out. And I think if you don't own this one, it might be worth putting on your watch list to maybe nibble on this company. Don't do a whole position, not even a quarter size position, like a quarter of a quarter size position. So put a very small amount of money in there and only buy more and only a little bit more when you're down like 10%. So first off, here's why I think the risk to reward looks pretty decent on this company. The PE is already a 9. So this is a really low PE. The net income could fall another 20, 30, 40%, and it'd still be somewhat reasonably valued on the PE. And hey, we're a customer. We use the OptumRx business. Look at this. OptumRx revenue has been crushing it. This has been one of their better performers. Look at this. For the full year of 2024, just this one segment of business was $133 billion of revenue. I mean, geez. Absolute monster of a company. But here's kind of the bad news. So the revenue grew by 12% year over year. So revenue's up 12, but net income's down 19. And we kind of already expected this. It was kind of already priced in. But yeah, the margins fell. The government doesn't want them having high margins. So net margin fell by 28% year over year. But you also get a nice dividend yield here, a 3.58% dividend yield here. So yeah. Any military stocks you like? I like Raytheon, RTX, Northrop Grumman. Is that NOP? I forget the ticker symbol. NOC maybe? Yeah, NOC stock. I love this company, man. I might be looking to buy into that stock, even though they're at all-time highs. I sometimes don't mind buying companies at all-time highs. Like, that's actually been some of my best performing stocks or some that I bought at all-time highs. Like PSIX, check this out right here. I bought this stock when it was at an all-time high right here. Like, it should show the buy order. Yeah, I bought it at all-time highs, then just continue to hit all-time highs, which is pretty cool. So I'm not always scared to buy some companies at all-time highs. Same with like Powell Industries. That one has been a crazy good performer. Like, look right here. This is where I bought the stock, the little buy order right here, and then boom, it just keeps on going up. So anyway, let's keep going here. Any REITs? Yo, I actually own one REIT in my Roth IRA, and I barely own any of it, but I own 2 shares of Cube right here, ticker symbol Cube. This is Cube Smart. This is a self-storage REIT. We're up 2.86% on them. They have a nice portfolio. Yo, what up, Fairway? What's up, man? So let's see here. Yeah, no problem, Adam. Juan said check UPS reaching for 2020 lows. So yeah, here's the bad news about UPS. Yeah, look at this. United Parcel Service. Look at this huge gap down they just had. They gapped down and then they kept on bleeding for 3 more days. So not great. And here's kind of why people like them. It's for the dividend. So check this out. You get a 7.74% dividend. But here's how we're going to go analyze together if this is a dividend trap. Is the dividend unsustainable? Here's why I think it might be so. So check this out. In the most recent quarter, they made 1.3 billion of net income. So just kind of remember that number. They made 1.3 billion of net income. All you got to do is go to the cash flow statement and see how much the dividend cost. Their dividend literally cost 1.35 billion of net income a quarter. So they couldn't afford the dividend this quarter or last quarter. So when they don't even have enough net income to cover the dividend, it's a tough buy. So I do think that one is a bit at dividend cut risk. But even if they cut the dividend in half, you still get a nice 4% plus yield. I think it would actually be healthy if they cut the dividend so they can have more money to play with. So, yep. Let's see here. CLS, how does the numbers look? Hey, what up, George? So let's see. CLS stock. Is that Celestica? Let's see. CLS. Let's pull it up right here. Let me get my lemonade. CLS. So there it is, Celestica. So wow, look at that. This stock is at a near all-time high right now. So congrats if you own this one. There must be something investors like here. Let's go see if we can figure it out. So connectivity and cloud solutions. Hey, that's an industry that's really hot right now. So let's go see how the revenue is doing. Look at that. It's up 27% from the previous year. So that's some pretty good growth. I mean, look at these year-over-year growth rates. I mean, they had that huge bump up quarter. So revenue is growing like crazy and net income is too. So this is great news. So the revenue grew 21%. Net income grew by 122%. So they just had crazy net margin growth. Highest margin ever, 7.3, highest for the whole year. So really good numbers. And the free cash flow was up 100% as well. So I can see why this one's at all-time highs. Looks like they're kind of just beating all analyst expectations there. Check out VHT. Is that an ETF right there? VHT. Does VTI have the same number of stocks as VHT? I don't know about the exact same number, but I can check its top holdings. So Vanguard Healthcare ETF. So hey, if you're looking for exposure to just healthcare, you could buy this ETF. Let's see what its top holdings are. So Eli, it's market cap weighted, so that's why Eli Lilly is the largest. You know, Eli Lilly, United Health. Oh, I love AbbVie, Johnson Johnson. So yeah, those are all the popular healthcare stocks. Meta's in beast mode. Yo, Thermo, dude, Meta has just been performing very well. Absolutely outstanding earnings, and they did fall 3% today. So, but I do own 5 shares of Meta. We are up 42% on them. Let me go analyze them because this is such a great buy and hold forever company. I mean, Meta owns Instagram, Facebook, WhatsApp. They own that Threads app. It's like a new competitor to X. It's called Threads. It's nearing the same amount of daily active users as Threads or as X, which is just crazy. So first off, this is a Mag 7 company. The PE is pretty fair. So here's what's crazy. The PE stayed at a 27, even though the stock, look at that, is at an all-time high. The PE ratio has stayed flat for the past couple years because they've been growing their earnings so much. So first off, a 27 PE seems pretty fair. You can see their active users right here. This is what's really impressive. They literally have 3.43 billion daily active users. So crazy numbers there. And look at this growth as well. I mean, first off, the revenue versus the net income. Like, look, the net income grew by 38% year over year. So the net income's up by 38%. And the revenue, oh man, come on, dude. I'm sorry. Yo, we're gonna be streaming later tonight. My Wi-Fi is just terrible, man. So the revenue is up 21, net income's up 36. I mean, they're just keep on growing their margins too. This is a $2 trillion company with 40% net margins. You also get a small dividend, and they're also doing crazy buybacks. So check this out. You know, they're making 18 to 20 billion of net income a quarter. What is Meta doing with 18 to 20 billion? Well, let me show you this right here. So first off, their dividend, you know, it's obviously a small dividend, but the dividend only cost 1.3 billion of net income a quarter. So what are they doing with the rest of their money? They're buying back their own stock like crazy. They spent $10 billion just this quarter buying back their own stock, $12 billion the quarter before buying back their own stock. So Meta's just such a shareholder-friendly company, buying back their own stock like crazy. So Dylan said Roblox. Hey, if we go back to the super investor tab, Kathy Wood's portfolio, we can see that's actually her second largest holding now. Check this out. Roblox is 6.23% of her portfolio, and they've just been crushing it. Hey, they also just reported earnings, and looks like they went up and then fell down, kind of like Meta and Microsoft. But wow, look at this right here. This is crazy. This is a good stat right here. This is the daily active users. So daily active users was 111 million, up 15%. Or this time last year was 80 million to 111 million. So apparently a lot of people are playing Roblox or something. If we go to the free cash flow here, the free cash flow numbers have been very strong. I mean, look at these year-over-year growth rates. The free cash flow's off the chain. But the one thing I would be careful with about Roblox is these net income losses. So if you're wondering why is the free cash flow so high but net income negative, that's because they're issuing a bunch of stock to pay employees. So they're paying employees with stock that's included in GAAP net income. It's not included in free cash flow. So anyway, that's the one thing I would be careful with, plus this leverage balance sheet, but still, stock's done amazing. It's really beat all analyst expectations. So yeah, Roblox, they're interesting. Market is closed. You are right. Market is closed. What app shows you all the different investments? Yeah, hey, Ryan, this is actually a brokerage that I'm on right here. If you want to get this brokerage that I'm on, it's in the link tree in my bio, the very first link there. It's my favorite brokerage, lowest fee. You know, I use Weeble and Robinhood as well, but Moomoo's my favorite one. Here's my Robinhood account as well. Yeah, so anyway, this one's my favorite for just, it has the most useful tools, best analysis stuff. So yeah, if you want to get it, link tree in bio, first link there, it's free. And it's an affiliate link too. So it helped me out. Oh, live inactivity detected. Just tell me I went AFK. All right, there we go. So anyway, let's keep going here. Someone said Uber stock. Man, I am in love with this stock right here. They're such a great company. Uber literally just ordered $1.3 billion worth of cars from Lucid. So Uber had a huge order of Lucid cars, 1.3 billion. And if we go to the free cash flow right here, they can easily afford it. So this is their free cash flow, pretty much do whatever they want with it because they don't pay a dividend. They literally made 2.25 billion just in the most recent quarter, up 65% year over year. After this number was already up 147%. So just incredible free cash flow growth. Like you couldn't buy this stock a few years ago, but this is a great buy right now, I think. And the net income as well. I mean, they're making nearly $1 billion of net income a quarter now, which is just nuts. They're deleveraging their balance sheet. Like, look at this. Asset to Asset to liability ratio went from 68% to 56. So you now own, look at this gap widen. You own a lot more equity in the company. So anyway, just incredible numbers here. And the business is still growing. Like we can see the mobility revenue, the delivery revenue, like Uber Eats. I mean, look at just the Uber Eats business. It's up 17% year over year. Really good growth. Same with the mobility revenue, up 15% year over year. So Uber is just crazy good at growth. Yo, what up, Francisco? What's up, man? And what's up, Robert Hunter? Hope y'all are having a good Sunday. Um, oh yeah, hey Juan. Again, yeah, if you want to get this app, I'm on. It's in the link tree there, the very first link there. I typed it in the chat. Should be in the description too. So let's see. Do you think Costco is better than Walmart? I think Costco and Walmart are very similar because Costco, or there's this, Walmart also owns Sam's Club, but Costco is such a great business model. Like, first off, you have to have a subscription to get into the store in the first place. So they're making a lot of money every month off those subscriptions, and you're buying stuff in bulk. So consumers feel like you get a good deal. You know, you're buying, I don't know, like fruit snacks in bulk. So consumers are happy. The business is happy. You know, they have some lost leaders as well, like the $1.50 hot dog and stuff. So Costco, I think they're such a well-run company. You also get a nice dividend. Any chances of UPS recovering? It definitely could be. I actually wouldn't mind them lowering their dividend because literally they couldn't afford the dividend in the past 2 quarters. So they basically lost money for the past 2 quarters because all the net income, or over 100% of the net income, got eaten up just by the dividend payments. So anyway, let's go look at Lyft right here. You know, we just looked at Uber. We can also look at Lyft. This is like the smaller competitor. Lyft has not been doing too good, which is unfortunate, but the financials are at all-time highs. The financials are at their all-time best, but the stock is still at all-time lows. Check this out right here. This is what's kind of weird. Like, look at the FCF, free cash flow. I mean, printed money. I mean, look at that. It's up 120% year over year. Finally, I mean, if we zoom out, you know, you couldn't buy this one. You know, they're losing free cash flow every quarter, but now the free cash flow has exploded, and they're finally starting to get net income positive. They made $2 million this quarter, $60 million last quarter. Way better than if we zoom out from the previous year. Look at this. They used to lose hundreds of millions of dollars every quarter. So anyway, Lyft is finally net income positive, free cash flow positive. So that's the good news there. But I'd probably rather go with Uber. Let's see here. Top 3 on the watch list is Astera Labs, still a buy after the spike up. Let's see Astera Labs. Yo, I love this company right here. First off, they're on my watch list. Like, just really good, great growing fundamentals. Like, check this out right here. If we go to the revenue, first off, the revenue, like, this is the kind of company you can trust to buy and hold for the long run. I mean, so growthy. The revenue is more than doubled, up 143% year over year, and they made net income on that. 31 mil this quarter, 25 mil last quarter. So they're making net income, which is great news. And we can scroll back up to the free cash flow up here. Fairway said there's no job growth recession. You know, I don't know. I have a conspiracy on that. But anyway, here's the free cash flow right here. The free cash flow also just insane. These green year-over-year growth rate numbers are just incredible. And also, best part is just this monster balance sheet. They have no debt here. I mean, just incredible financials, in my opinion, on Astera Labs. So growthy, net income positive, no debt. All right, let's see. Yo, Spread the Wealth. What's up, dude? Marathon thoughts. Isn't this like a Bitcoin mining company? So the unfortunate thing about Marathon is they just don't keep up with actual Bitcoin. So like Bitcoin's pretty close to all-time high, but Marathon, look at this. They're nowhere near all-time highs. All-time high was $74. They're at $15 a share. So the stock really just hasn't kept up with crypto. So I'm pretty sure this company just mines Bitcoin or something, but I'd be careful with that one. It just hasn't been a good performer. Rather probably just on Bitcoin. Did you ever look into Fubo TV and the Disney thing? I didn't. Was there some sort of like DOJ? I saw something. It was like a DOJ is stopping the merger of Fubo and Disney. I don't know. I got to look more into that. Plasma said PayPal is my top pick. Hey, let's go check out PayPal. Then we can look at ANET as well. Yo, remind me to look at that one, Spread the Wealth. We did just look at that one a bit ago. But PayPal, yeah, look at this. So they reported earnings and they fell bad. I mean, they gapped down on earnings and then fell for another 3 days in a row. Investors are still digesting the earnings. But let's see. They triple beat. That's the weird part. They beat on revenue. They beat on net income. They beat on EBITDA, but the stock still fell anyway. And maybe it was this free cash flow number. Free cash flow fell by 50%, but they're just investing back into the business. But look at this right here. This is the good news. They're making easily over $1 billion of net income a quarter. So PayPal's making over $1 billion of net income a quarter what are they doing with all that since they don't pay dividends? They're actually buying back their own stock like crazy. They're literally spending 1.3, 1.5 billion of net income every single quarter buying back their own stock. So you literally own like 7% more of the company than you did a year ago. So there's 7% less shares that exist. So that basically makes your net income per share go up by 7%. So just really good news. Disney Fubo deal has been out, only major catalyst. Regular her, yeah. Let's see. Kudo said, what about UPEXI? What is that one? I'll type it in for you. So Upexi, I haven't heard of this stock before. So yeah, I'd like to be careful with these. Again, very small company, a $250 million company. So very small market cap. Let's see. Yeah, they're losing money every quarter. And look at this. Yeah, nothing's, I wouldn't really buy this one. Nothing's blowing me away. I mean, revenue's down 40%. I mean, just not great. Leverage balance sheet, that one, just a really small company. I'd be really careful with that one. That could be a fun swing trade, but I don't know about buy and hold forever kind of stock. Oh yeah, we can look at Roblox and yeah, remind me to look at that one. And thoughts on the Honest Company. What's the ticker symbol for that one again? Yeah, we'll be really quick about Roblox since we just looked at Roblox stock. But basically, they had their daily active users number beat like crazy. Their daily active users is 111 million versus the same time last year was only 79 million. So, I mean, dramatic increase in the daily active users. So apparently a lot of people are on Roblox right now. That was kind of the good news there. And the revenue growth was good, but they're still losing a lot of net income. Yo, what up, Emmanuel? What is I don't know about that one. Disney a buy after ESPN news with the NFL. Hey, that is good news because Disney does own ESPN. Is Hood still a buy? It's a tough buy, close to the $100 range. It is such a great company, so growthy. I would try and I'm actually looking to buy more Robinhood. Tavo said Palantir earnings. So yeah, let's look at Palantir real quick because they report earnings on Monday. So that's tomorrow. So tomorrow we get Palantir earnings. They're either obviously going to go up or down a bunch. And here's what I like about Palantir, to be honest with you. I mean, half the revenue comes from the government, a lot of government contracts, a lot of police stations use their software. I mean, the revenue's up 45% year over year. I mean, outstanding growth. And the commercial revenue as well. Commercial revenue is up 33%. So really good growth on both segments. They're making net income every quarter. Revenue's up 40%, really growthy. And look at this balance sheet, man. Absolute fortress of a balance sheet. No debt, lots of cash earning interest. So Palantir, investors love everything about Palantir. Austin said SRAD is my top pick. So let's go check this one out. Sport Radar. So let's see. They're an $8.7 billion company. Look at that crazy appreciation. So they went from 10 to 30. So yeah, the stock has done really good. So they're a European company. So just for simplicity, we'll switch the currency to US dollars. So, I can't actually cover this sector. Uh-oh. Well, hey, it looks like they're making net income now, which is good. Definitely an improvement from the previous year. Revenue's up 17% year over year, but I didn't realize they were in that sector. Last time I went over it, my live got taken down. So, all right. Oh, HNST, that's the Honest Company. So yeah, this company, I don't know if it really will outperform the market in the long run. I mean, they literally just sell a commodity. Diapers and wipes are literally 70% of the business, but the good news is they have no debt. So if we go to the balance sheet right here, they have no debt at all and $72 million of cash. So that's kind of the good news. No debt, $72 million of cash, and the whole company is worth $490 million. So like 20% of the market cap is just their cash on hand, which is pretty interesting. And if we go to the net income right here, they're just now getting net income positive. I mean, they made $3 million the most recent quarter, the best it's really ever been. They used to lose a lot more, so they're in a really good spot right now. But I don't know how much that'll outperform the market in the long run. What do you think about Kava? Kava earnings are on the August 12th. So this is like a competitor to Chipotle. It's like a healthy restaurant kind of. I just saw one for the first time last week. So check out Kava Group. We can see Kava's 99% of the revenue, and we can see the really good growth here. I mean, it's up 28% year over year. I mean, for a restaurant in this environment, that's a really good growth, plus 28% year over year. We can also see the net income. I mean, look, this is what you want to see. I mean, the net income growth is incredible, making net income every quarter, revenue's growing. So I think it's just the whole environment of restaurants right now are kind of struggling. So that might be wearing on the stock price, but Cheesecake Factory's doing really good too. Um, Let's see. I feel like you and Palantir is going to drip on earnings if they beat. Yeah, Palantir has a ridiculously high valuation, like 160 times sales, not even like net income. I got into UNH. I will be quick about UNH. We already looked at this one a few times, but yeah, United Health, I do think it's worth a nibble here. Not a full size position. Don't make this like 10% of your portfolio, but make it a very, very, very small percent. And only when it's down, then buy more. And if it just goes up, then hey, don't add more. Just enjoy the gains. But anyway, yeah, this stock is close to an all-time low. Government regulations not in their favor, but I think the risk to reward looks decent. 9.95 PE. This is pricing in the net income to collapse another 30%. I don't know if it will, though the margins did just collapse. I mean, look at this. The revenue was up 13% year over year. Net income fell 19. So what that means is, yeah, these margins are collapsing only at 3%, but that's kind of what the government wants right now. I mean, it's kind of for this reason right here. Like we used to Optum RX, we're a customer. I mean, how does a company pull this off? 2020, 35 bill, then boom, 90 bill the next year. Full year 2024 was 133 bill. I mean, that's just one segment of business. So anyway, you get a 3.5% yield. I think it's decent. Um, we'll look at the Cheesecake Factory after this too. The Intel, so Intel stock, this one has not been performing too well, and I feel bad if you own this stock because this has been the worst performing like chip play. Like AMD's crushing it, Taiwan Semi, Nvidia, Marvel. I mean, all these other like chip plays are doing really good, but not Intel. So this is kind of like a turnaround play. Yeah, look at this. Here's the bad news. Intel is literally the same stock price that it was back in 1998. So if you bought the stock in 1998, you are down on your position, which is just crazy to even say. A lot of people like them because of their huge market share. That is low, or like it was a 66% PC GPU market share. Now it's a 63%. So the market share is falling a little bit, but these losses are the real reason why the stock is doing bad. I mean, they're losing a boatload of money. I mean, a couple billion of free cash flow every quarter. Net income's kind of even worse. I don't know how this is possible, but they've lost $17 billion just as one quarter. So, they really need to turn around the financials. I mean, it's not good. Uh, so yeah, it's but that's why the stock is so low. It's kind of all priced in that it's terrible. What do we think of FedEx instead of UPS stock? First off, my favorite pick is Amazon, even though it's not a pure play, kind of like FedEx and UPS, because Amazon has the AWS and the grocery and all this other stuff. But let's go look at FedEx right here. Another one that hasn't been performing too well. Same price that it was back in 2017. So let's see the dividend yield here. So yeah, this is a way safer dividend. So you get a 2.55% dividend. Payout ratio is only at 30%. The PE is a 12, so really low valuation here. So let's see how they're doing. So yeah, look at this net income. It's pretty good. I mean, if you kind of average it out, it's over $1 billion of net income a quarter. So they're making $1 billion of net income a quarter. Let's see how much the dividend costs, just so we can get that idea. And look at this. So the dividend only costs $330 million of net income every quarter. And they're also even buying back their own stock. They're actually spending more on buybacks than they are on dividends. So hey, that's really good. Yeah, safe dividend payout ratio right there. What up, Pod Gems? All right, let's see here. Archer Aviation. Yeah, Archer Aviation's a revenueless company. I wouldn't buy them. And the Cheesecake Factory. Yeah, and then we got to look at some of these other stocks here. I want to look at the Metals Company. That's another revenueless company. But here's the Cheesecake Factory. If anyone's heard of this restaurant before, I love cheesecake, probably my favorite dessert. But this one is close to an all-time high. Look at that. I mean, it's the same price it was back in 2017, but it is nearing that all-time high level, which is really good. And if you buy the stock, you also get a 1.7% dividend. So nice little dividend there. So yeah, the Cheesecake Factory is 73% of the revenue. Then I guess they got some other restaurants like North Italia. Haven't heard of them before. But yeah, look at this net income. This is really good. I mean, they're making like close to 40, 50 million of net income every single quarter, and it looks like it's growing. So hey, looks like the Cheesecake Factory is doing pretty good. Let's see. Okay, the Metals Company. We'll start with this one because they've had a lot of stock price appreciation recently, but this company, I'm staying away from them just because they still don't sell anything. So if we go to the revenue right here, revenue says no data because they've never sold anything, not a product or a service. Basically, what this company wants to do is put these little robots in the water at the bottom of the ocean that like suck the minerals out, like gold and just stuff from the ocean, like nickel, And so, yeah, they don't sell anything right now. No data for the revenue, and they're losing a lot of net income every quarter. They've leveraged up their balance sheet. Look, they used to have the same amount of assets as liabilities. Now the liabilities are more than the assets. So I'm being careful with the metals company. That's when you want to swing trade. I don't know about buy and hold that one, but maybe I guess if you buy and hold it, you wait for that point where they're finally making money. But they may never not. I mean, it sounds like a crazy project. FSLR, First Solar. So yeah, out of all the solar plays, this is this is probably my favorite pick out of all the solar stocks. If you wanted exposure to solar, I would check out FSLR. So check this out. Here's why I like them so much. It's because they're just making a lot of money. So the reason the stock is down so much is because they kind of lost the growth. Like the net income did fall 2% year over year. They lost the Inflation Reduction Act a long time ago. That bill gave solar incentives, like tax incentives, and now that just got removed. So that's not great. But anyway, they're still making a couple $100 million of net income a quarter, which is great news. A really good balance sheet as well. So First Solar is like the best financially stable solar play. Enphase is kind of okay. Which high performing stock has a dividend? Hey, MO is kind of like been a decently. Wow, look at that. They're close to an all time high. So, oh, actually, no, they're not. They're the same price as they were back in 2018. Well, I guess not too good performance, but Altria, this one has like a 6.6% dividend yield here, and they've been performing well in the past 2 years, but I guess not on the weekly. I didn't know that. Let's see, Target. Hey, let's look at Target. So here's kind of another. It's not really a grocery store. So Target is more of like a discretionary grocery store. Like you're not going to Target just to really get groceries. You may be buying some clothes or furniture, like pillows, or something that's not groceries there, and that's why the stock has been hit so much, more than like a Walmart or a Kroger. It's because they sell more discretionary products. Like check this out: food and beverage is only 25% of the revenue. Then household essentials, apparel and accessories, home furnishing and decor, beauty products. But here's what I like about Target. This is another nice dividend play. So check this out. You get a 4.5% dividend, and the payout ratio is only a 50%. So that's pretty good. Yeah, hey, we'll look at Oscar after this. Yo, Scope, we've already looked at Oscar Health like 4 or 5 times, so I don't really want to repeat some stocks a bunch, but we'll try and get to that one. But yeah, here's kind of why Target's kind of been struggling. They lost their growth. The revenue is down 2.8% year over year. The net income did grow though. So look at this. They're making just over $1 billion of net income every quarter. Let's go see how much their dividend costs. So they're making $1 billion of net income every quarter. It should cost around $550 million if that thing is right. So yeah, look at that. Cash paid dividend only cost $510 million every quarter. So the dividend, that 4.5% dividend, is very safe. And look at that. They're also buying back their own stock. They spent $250 million buying back their own stock, 500 mil. So they're also returning some money to shareholders. So anyway, they might be worth a little nibble. Ooh, here's one. APLD. Oh, we'll look at Oscar too. But APLD, that's actually an Nvidia holding. So if we go over here to the, oops, sorry, my cursor. We go to the Nvidia portfolio right here. Check this out. Whereas APLD is one of their larger holdings, and they just had a huge partnership with CoreWeave. So of course, Nvidia owns APLD and CoreWeave. And then shocker, they both go into a huge partnership. So yo, IXRN, no way, dude. IXRN, thank you so much for the 20 roses there, bro. Thank you so much, man. If you got another stock you want me to look at, let me know. So APLD also just reported earnings. They gapped up on it. Let's go see what the earnings were. Also, a lot of people know them for the data center hosting business. The cloud service business has been growing like crazy. I mean, look at this year-over-year growth number. It grew 220% from the previous year. So as long as they can keep up this growth rate, I really like what's in store for APLD. They are still losing a bit of money, but the revenue growth is there. I don't know why the revenue says it was negative, because the revenue was 38 million. Anyway, yeah, Nvidia owns them as well. Huge partnership with CoreWeave. Let's see here. Lucid Stock and GE Vera Nova. So Lucid Stock, I stay away from this one just because they burn a lot of money. But the thing is, Lucid just had a huge deal with Uber. Dang, yeah, they sold off that whole rally. So on this day right here, Uber decided to buy $1.2 billion worth of Lucid cars. And those Lucid cars are actually using NVIDIA software for autonomy driving. But anyway, look at this right here. Remember this number. This whole company is worth $7.4 billion. So Lucid is worth $7.4 billion. Here's kind of the bad news about this company. So you buy in at that valuation. You could buy the whole company potentially, but you buy in at a $7.4 billion valuation. You're buying a company that loses a couple hundred mil every quarter, 400 mil, a billion just this one quarter they lost. So they're just losing a lot of money right now. So we really want to see Lucid start to get net income positive because they do have some real bankruptcy risks. So yeah, just don't love those net income losses. Why did the market go down on Friday? Because, that's a good question. I think it was the jobs report number. Like 250K jobs were lost, something like that. Hogan said TSLL stock. So yeah, this is the 2X Tesla ETF. So basically, if Tesla goes up 1%, this goes up 2%. Same for the opposite direction. But or yeah, look at this. If you kind of look right here, Tesla was down 1.8, so this was down 3.37. So also, this is fun to do options with because options are really cheap because the stock price is only $10. If you were to do a call option on normal Tesla, it's really expensive. But if you do a call option on TSLL, it's way cheaper. Again, I don't do options. It's really risky. You got to be careful with that. Not financial advice, but that's like a cheaper way to do if you want just something really risky. But I don't recommend doing that. Yeah, again, not financial advice. I sell nothing. I don't have a course, book, Discord, WhatsApp, Telegram. I'm just on here to give my opinion. Someone said Apple. Yo, let's look at Apple, man. I'm on an Apple device right now. A lot of people are locked in the Apple ecosystem. And yeah, look at this. They have kind of been struggling the past couple candlesticks right here. So yeah, IXRN. Yeah, hey, thanks for following. Yeah, this is my second account. My TikTok banned my main account, so we're streaming on the second account right now. But let's look at Apple right here. So the PE is a 30. Kind of look at that historically. That's historically in line with what Apple normally always trades at. You can see their smartphone market share. They actually have a 19% smartphone market share, and they make their own chips. So they have a smartphone chip market share of 17%. And anyway, we can see the difference between their services margin and gross margin. So obviously the iPhone is most of their revenue, but then they have the services business. So if you go buy something in the App Store, you go spend $100 in the App Store, 30% of that, so $30 of every $100 you spend in the App Store goes back to Apple as a high margin royalty, like near 99% net margin. So just crazy. Their services revenue is the highest margin segment of business. It's now nearly $100 billion of annual revenue for them. Then, of course, they have the Mac revenue, the wearables, the iPad. So this is just a stock you want to buy and hold forever. No real reason to sell out of Apple. And look at this as well. This is why Apple's a bit affected by tariffs because did you know only 36% of Apple's revenue comes from the U.S.? Then they got EU, China, and all these other companies. So yeah, that's what I like about Apple. They're making a lot of net income, like $20 billion of net income a quarter. We can see also what ETFs own them. Oh yeah, these are the ETFs. Anyway, that's Apple, Mag 7. Intel going to rebound, I think. Yeah, I'd be careful with Intel. The risk to reward might be decent on them. Is Tesla a good buy right now? I don't think so. A CSL, a buy the dip opportunity. Wait, CSL, you talking about Carlisle? Yo, I love this company right here. Yo, this is actually one of my larger holdings. If I head over here back to my Robinhood portfolio, I own 13 shares of this company. We're up only 6% now because look at this. On the past week, they're down 18%. So the earnings weren't great. They missed on every metric, just very slightly. So yeah. Operating profit fell 11%. I still really like this company. Margins are starting to hurt a little bit, but they've been raising their dividend for over 49 years. So next year, it'll be their 50th consecutive year of raising their dividend. They'll be a dividend king. But this is another buy and hold for the long run company. I like CSO. I made so many YouTube videos if you want to see in-depth analysis on them. And by the way, hey, we're going to be streaming at 8 o'clock Eastern time tonight. So if you want to hit the follow button, hit the subscribe button, notification bell. We'll be streaming later tonight, another 2-3 hour long stream if y'all want to join that. So I hope y'all are having a good Sunday, by the way. The train, whatever this man. Hey, what's up? What up, Hank? Hope you're having a good day. All right, let's see here. We can look at Tesla. So Tesla, this is why I'd stay away from this company personally. Like if I judge Tesla the way I would judge any other company, this is one I would not want to own. I mean, they're ridiculously expensive. What's the PE? So yeah, the PE is 180. So they're trading at 180 times net income. Their vehicle delivery numbers just collapsed 14% year over. So it's okay to have a high PE ratio, if you're high growth, but Tesla kind of lost its growth. So if we go to the automotive segment of their revenue, which is literally 88%, Oh my goodness. Hold on, we gotta back out and go back in. So, yeah, if we go to Tesla's revenue, 88% of the revenue comes from their automotive segment. And look at this, it's down 12% year over year. So the automotive revenue lost their growth, but the energy business, dang, actually the energy business fell 7.5% year over year as well. Yeah, Tesla did kind of lose its growth, not great. And the margins, this was the worst part, the margin collapse. So revenue's down 11, net income's down, actually they had a one-time adjustment to their net income. They kind of fibbed you. Look, the operating profit was 920 mil. The net income was 1.2. That's faked. That's gap trick. So the net income really fell 58% year over year. The margins collapsed. There was really a lower margin anyway. Be really careful with Tesla. What happens is, yo, Colton, this is actually a brokerage right here. If you want to get this brokerage that I'm on, it's free. It's in the link tree in my bio, the very first link there. It's an affiliate link too, so it'd help out the channel. It's where I keep my idle cash. Like, look, you pause your cash, you get a little daily interest, and you can see all like the super investor portfolios as well. This might fit. I have multiple brokerages here like Robinhood, Weeble, but Moomoo's my favorite, lowest fee brokerage, free. Like with Robinhood, you have to pay $5 a month. You don't have to pay nothing with this one. Best analysis tool. So yeah, I love this one right here. First link in the link tree in my bio, or you can type it into Google. It's called Moomoo. But anyway, let's keep going here. CoreWeave was crazy, probably. Oh, what up? Randomly Smart said BMNR stock. What's this one again? Oh yeah, Bitmersion. So this is basically the Ethereum company. Basically, this company just mines Ethereum. So if we go to where the revenue comes from, 91% comes from self-mining. All they do is mine Ethereum. So it's kind of like an Ethereum proxy. All right. Any high yielding dividend stocks? So I like Main Street Capital, ticker symbol MAIN. This is one of the few companies that pay monthly dividends. So check this out. The stock's at an all-time high. And even if you buy the stock now, look at this yield, a 6.5% yield. This is because this is a BDC, a business development company, and they actually have to pay out most of the income they make in the form of a dividend by law. And actually, not financial advice, I might be biased, but I do own them. So if I head over here to my Roth IRA, I got 7 shares of Main Street Capital. So yeah, they're my highest yielding stock, monthly paying dividend, and it's sustainable by law. All right, let's see. So yeah, have you covered Estate Lauder? Hey, we can look at Estate Lauder. Yeah, I wouldn't buy Tesla. And when I look at Google, Meta, Amazon, I think those are way better buys than Tesla. Again, I think Tesla's market cap is so high because of the future growth of robo-taxi network, Optimus, robots, or whatever, but I just can't pay that ridiculously high premium right now, in my opinion, if I judge them the way I would any other stock. So here's Estate Lauder right here, ticker symbol EL. This is a beauty and cosmetics company. And I like this business because usually these are really high margin products. Like look, skincare, makeup, fragrance, but this is kind of like a rebound play. I mean, look at them on the weekly. The stock has done terrible. We really want to see this company go back to net income positivity because look at this. Last quarter, they lost 600 mil, 100 mil. They did make net income in the most recent quarter, but it did still fall 52%. So I really want to see this company consistently make more net income. And also Michael Burry, if anyone's remember Michael Burry, look, Jane Lauder owns 6.5%. But Michael Burry sold every single one of his stocks. He sold Geo, the guy from The Big Short. Michael Burry sold all his stocks except Estate Lauder. The only stock he owns is Estate Lauder, which is kind of interesting. A bag of chips, small, that went from 75 cents today, $2.69. Hey, y'all see them McDonald's? Yeah. When the M2 money supply goes up, that's what messes things up. So let's see. Abby said DSP stock. What is DSP? So Viant Technology. So an $850 million company. So very small market cap, only an $850 million company. But let's see how they're doing. They did lose net income in the most recent quarter, but what's the revenue? So this is really good revenue growth. The revenue's up 33%. The net income before today was really good, so something happened. Maybe it was a one-time adjustment. Okay, so that's good news. Really good balance sheet. Cash flow went negative. Anyway, this is like a pretty decent stock. I mean, nothing's blowing me away too much, but I mean, it's not too bad. DSP, yeah. Let's see. These are some weird companies. What is, hey, we'll check it out. ARDX. Never heard of this stock before. A $1 billion company. Look at that. The stock's the same price it was back in 2017. So the stock's kind of done nothing for a few years. What do? Product sales. Well, hey, whoa. look at these year-over-year growth rates. So it looks like the revenue's really rocketed up. I actually love to see that. So if we go to revenue right here, yeah, revenue's up 61% year-over-year. That's incredible. They did still lose 40 mil of net income, but I mean, that's some incredible growth. As long as it can keep up that growth, I mean, it might be worth looking into actually. That's really good sales growth. But yeah, got to see them get net income positive as well. I got one more for you. Have you covered? Oh, Adobe stock. Yeah. Oh, wait, we got to look at AMSC first, and then we'll look at Adobe. American Superconductor or Semiconductor. Or no, Superconductor. This is one I've kind of been talking about. I really love this company. I think there's more upside potential because check this out. Even though the stock's pretty much at all-time highs, they're still only a $2.4 billion company. So the whole company's worth $2.5 billion. And here's what I love. They're making millions every quarter. You know, that they're the most profitable they've ever been. So you're buying a company that now is making a couple million every quarter, and it's going to be growing. You know, you're going to keep on growing from this. And look at this revenue growth. This is the best part. 79% year-over-year revenue growth. Net income's up 3x. I mean, just incredible numbers here. Look at this incredible balance sheet growth. I mean, look at this. You used to have a 40% assets liability ratio. So the liabilities were 40% of the assets. Well, now it's only 26%. So look, you now own way more equity in the company. This is just I can see why this stock's at all-time highs right now, and I think it might continue to just keep on hitting new all-time highs. Let's see. Oh yeah, Adobe. So I'm on an Adobe product like nearly every day. I'm on Photoshop, After Effects every single day, and their stock is really being hurt right now from the thesis. So people are making logos and editing stuff in like ChatGPT. Like my friend just made an insanely good logo in ChatGPT to where it impressed me. I didn't know AI was that good. So first off, the PE is dog cheap. This is why I think Adobe's at a pretty good risk to reward. The PE is a 22, literal lowest it's ever been. And look at this. We go to where the revenue is, the digital media revenue. It's still literally growing double digits at a new record. It's at a new record for the full year 2024. Digital experience revenue, which is their second largest segment of revenue. Also, look at that, at an all-time high right now. So anyway, Adobe's still growing. And again, the future is uncertain because like what will happen in 10 years? Well, we still need Photoshop in 10 years. But for right now, the business is doing incredible. 1.8 billion in net income every quarter. The free cash flow is even better. That's what FCF stands for. Look at that. Nearly 2 billion of free cash flow a quarter. Net income's nearly 2 billion as well. And they're spending all their money on buybacks. So look at this. They're making 1.7 billion of net income a quarter. Since Adobe doesn't pay a dividend, what are they doing with that? Well, go with cash flow statement. Oh my goodness. They're spending, there we go, 3.5 billion of net income just in the most recent quarter buying back their own stock. So they're spending billions every quarter buying back their own stock. So you own like 6% more of the company than you did a year ago thanks to the buybacks. That's just going to help out their EPS. You know what? Let me show you that real quick. So I'll be really quick about this as well. This is what's so impressive about the stock buyback. So if we go to the net income right here, so look, the net income grew by 7.5% year over year. So pretty easy math. The net income grew by 7.5% year over year. But check this out. The earnings per share, which is just the net income per share, grew by 12% because there's less shares that exist. So there's like 6% less shares. So the net income is spread out through less shares, making the EPS go up. Anyway, that's what's so cool about buybacks. Let's see, HIMS and her. Yeah, let's check out HIMS. Oh, and ASML. You know what? Remind me to look at ASML after this. Yeah, Adobe, the buybacks are pretty good right now. And the valuation's really cheap. So here's HIMS and hers right here. So this stock is pretty much at an all-time high right now. It's because they're so growthy. A lot of people think they're a meme stock, but no, they're really growthy. The revenue is literally up. Like, look at this, 110% growth from the previous year. I mean, that's incredible. And that's why I really like this one. And not just the net income, or not just the sales, but the net income as well. The net income is 50 million just this quarter, up 3x. The growth is just crazy. So revenue's up 100%, net income's up 300%. The free cash flow's up 300% as well. I mean, they're so growthy. No debt on this one. I mean, just really good numbers on him. So I actually think that one's a good hold. You do got to be careful. They did just lose their Ozempic partnerships. They used to sell a weight loss prescription called Ozempic. Now they no longer do. I hold options in SPY, QQQ, Nvidia. Yeah, I don't know, man. That's good luck, Michael. What app are you using? Yo, Mohammed, this is actually a brokerage right here. So if you want to get this brokerage I'm on, it's in the link tree in my bio, the very first link there. It's my favorite one to do analysis. This is my favorite free tool analysis one, but also if you deposit like $100, we'll both get some free stocks. It's an affiliate link, so it helped me out. So I love just doing analysis on here. That's where I like to park my idle cash too. Like, look at this. My cash earned me 23 cents of interest today because your idle cash earns a nice little interest too. So yeah, this is my favorite brokerage for analysis. So let's go look at this stock right here. I don't normally cover this kind of company, but I want to share you one thing I found really interesting about GameStop. So this one is a meme stock. The fundamentals are terrible, but look at this right here. This is the one reason why why there's some hope at GameStop, why you'd maybe want to buy them. Remember this, the whole company is worth just under $10 billion. So the whole company, we'll just round it up. The whole company is worth $10 billion. So you can buy in at this valuation of $10 billion. And here's what I meant when I said the fundamentals aren't good. Like, look at this. It just heavily declines every quarter. I mean, look at this, these year-over-year declines. But here's the best part. They're a $10 billion company, and they literally have $6.4 billion of cash. Record amount of cash. That's because they're issuing a bunch of shares. That's actually why the stock isn't doing too good. That's why the stock tanked so much. They issued shares to raise cash. So, and it's I think, yo, no way, Phil. Thank you so much, man. I'm gonna give you a follow. Yeah, if you want to get this app that I'm on, this brokerage that I'm on right now, it's in the link tree in my bio, the very first link there. It's called Moomoo. So yeah, it's my favorite one for analysis. Because I use all these other ones too. I use Weeble and I use Robinhood, but they don't have nearly the same amount of useful tools as this brokerage right here. So yeah, that's why I recommend this one. Anyway, yo, that's awesome, Phil. Heck yeah, yo, your future self will thank you. Investing. What options are you in Robinhood? I actually don't do any options. So in Robinhood, I just have a pretty boring strategy. I just buy and hold great companies. These are all the stocks I own: Google, Meta, McDonald's. But yeah. Palantir as well. Yeah, Palantir, they report earnings tomorrow. So I'll be quick about this one since we already covered them, but the valuation's high, so I am curious to see what'll happen. But they report earnings tomorrow on Monday. And on earnings, they either go up or down a bunch. So I'm gonna give you a follow too, Phil. I appreciate that. So here's the government revenue right here. This is why a lot of people love them. A lot of police stations are using Palantir's software, and it's up 45% to a new record. I mean, the business is just at an all-time high record, most profitable they've ever been, no debt, fortress of a balance sheet. So this is a company I would love to own, but not at this valuation. Yo, Hank, have a great day, man. Buy gold. It just never goes down. Yeah, gold's been crushing it, man. Yes, sir. Hey, thanks for showing up. Happy Sunday. Yo, by the way, I'm going to be live at 8 o'clock tonight. I am going to get off the stream in like 20 minutes, but I'm going to be live. I'm going to do another 2 or 3 hour live stream tonight at 8 p.m. when the market's open. So yeah, let's keep going here. Let's going to buy Chipotle. Yeah, Chipotle, I think they're actually doing pretty good. Even though the earnings fell, it's just because the PE was high. Best gold stock. The best way to get exposure to gold is just ticker symbol IAU. It's literally the digital version of gold. And if you buy physical gold, when you buy it, you pay like 0.5 to 1% spot fee. When you sell it, you have to pay another fee. You have to go there in person and stuff. So basically, I almost prefer IAU over physical gold. It's SIPC insured, so it's not gonna. Anyway, that one's run by BlackRock too. Another one that's the exact same ETF is GLD. This one's run by SPDR. So anyway, someone said thoughts on SMCI earnings. So oh my gosh, there we go. SMCI, so Super Microcomputer, this company just had a huge contract with Datavolt. So the reason they gapped up on this day, there was no earnings this day, but they gapped up a huge chunk this day because of a $10 billion partnership with Datavolt. So that really is going to help out the company because before today, they weren't doing before that report, the stock really hasn't been doing too good, and neither have the financials. So I do own this one, by the way. Look at the net income. The net income kind of collapsed down 72%. So, but that huge contract really changed things for them. And I'll show you my position in them, by the way. Where is it? Super Micro. Yeah, dang, we're up 115% on them. Wish I bought more of that company. But yeah, Super Micro, I bought them during the whole shenanigans of the accounting problems. So yeah, the stock, look right here. You never really see this. If we look right here for earnings, the company reported earnings this day, and then they didn't report earnings again all the way until over here. It was like months later. So that's why the stock fell right here. They were supposed to report earnings this day, never did. Got into some accounting issues with the SEC, but they overcame that. So that's when I decided to buy them. SoFi, oh my gosh, yeah, we got to go over SoFi. Man, they're another one of my best performers. We're up, I regret every share I've ever sold of SoFi, but we have 24 shares left. We're up 240% on them. They deserve to be doing so good, man. They deserve the hype, and I expect them to kind of continue to keep on grinding up. Yo, Jeff Mack, hope you're having a good Sunday, man. So he said Super Micro is my largest holding. Jeez, man, yeah, they've been a good performer. Yo, Gabriel said Uber is earning 6. Yeah, Gabriel, well, check out Uber stock too. So here's SoFi Technologies. Here's why I like this one, and I think they're just going to continue to be a winner in the long run. So we go to SoFi Technologies financials right here. Look at this. So half the revenue comes from lending, but then they have their financial services business. They have their own banking charter and stuff, and the growth is just ridiculous. I mean, it's up 101% from the previous year. So that's the best part about SoFi is the growth of the fintech revenue. And also, people are really starting to take them serious. The revenue grew 42, net income was 100 million just this quarter of after-tax net income. So people are really starting to take SoFi serious. They're very growthy and very innovative. So let's see, Uber stock. Check out ELDN Pharmaceutical Said report trial. Hey, well, check that out. What up, middleman? So here's Uber Technologies. I'll be quick about this one because we already covered them. But basically, here's their active users. They have 170 million monthly active users, and the free cash flow is ridiculous. I mean, they're making over 1.8 billion of free cash flow every quarter, and it just continues to grow. The operating profit is just as good. They had a little bit of one-time adjustment. I liked looking at the operating profit. It says they made 7 billion this quarter. They didn't actually. They only made 770 mil. It was an acquisition adjustment, but anyway, the fundamentals are at best. They're deleveraging their balance sheet. Look at this gap right here. The liabilities used to be 68% of the assets. Now it's only 56 while growing the assets. I mean, Uber is in such a great spot. They just bought $1.2 billion worth of cars from Lucid that they can easily afford. They have a huge stake in Grab Holdings, which gave them instant international diversification. Uber's just really cool. So they're a great just buy and hold forever stock. Don't really trade them, just hold them. So someone said ELDN. Yeah, yikes. So he said they set to report data from their trial. So maybe they'll get FDA approved next week or something. $202 million market cap. Sebastian said, what app is this? Hey, yeah, sorry. If you want to get this app, it's actually a brokerage that I'm on right now. If you want to get this brokerage that I'm on, it's in the link tree in my bio, the very first link there. And yeah, yikes. So look at this. This is a revenue-less company. So the revenue says no data here because they've literally never sold anything. They never sold a product or a service. So they're a revenue-less company. I'd be careful. Yeah, you're really you're hoping for that good catalyst right there that they have some good earnings. So good day, everyone. Is this the Weeble platform you're using? No, Sean, this is not Weeble. This is actually called Moomoo. It's a different brokerage. It's my favorite one for analysis. Lowest fee, lowest cost. It's free. So my favorite one for analysis. The free tools really sells it for me. So yeah, if you want to get this app, it's in the link tree in my bio there, the very first link. So anyway, and it's an affiliate link. So if you go on the app and deposit $100, we'll both actually get some free stocks because of that. So hey, it help out the channel. And I sell nothing. I mean, that's an affiliate link, but I don't sell anything. I don't have a course book, Discord, WhatsApp, Telegram. But anyway, let's get to this next stock here. Ticker symbol CART. So Instacart. Let's check that one out. Oh, hold on. I think I just accidentally disconnected there. Oopsie. Oh, hopefully that doesn't. There we go. All right, let's get back here. So this is Maple Bear Instacart. So if you heard of Instacart before, this is their stock, and they've actually been doing pretty good. So let's go see how they're doing. What about the free cash flow? So yeah, look at that, 280 million of free cash flow. They're making like 100 million of free cash flow plus a quarter easily, and they're making net income on that. So 100 mil of net income a quarter. Really good balance sheet, man. I remember looking at this company a while ago. So yeah, Instacart's actually doing very good right now. So yeah, congrats if you own Instacart. They're kind of like an Uber competitor. How do you feel about Weeble Stock? Yeah, ticker symbol BULL. They just IPO. They have a bit of a complicated share structure, but they're making net income. So they're making net income every quarter. Let's see here. So here's Weeble Stock. If we go down here to the net income, good news, they did make net income the 2 most recent quarters. And hey, I've given them a lot of fees. Look, I have a Weeble account. I've given them probably, they've made some transaction fees off me. But yeah, I'm being a little careful this one. I want to wait for a little bit more data, but yeah, they seem really interesting. I love their app. Great product. JBS is one of the few ones. Let's see. What is JBS? It's one of the few ones that actually benefit from the tariffs. Let's see what JBS is. Someone said JBS stock benefits from the tariffs. So let's see. This is an NV stock. So what country is that? I forget. Is that Oh, so their currency is in Brazilian, so we'll kind of switch it to USD. So, uh, let's see, they're in beef, Pilgrim's Pride, Brazil, pork. So that's a lot of industries there. So, and yeah, look at that. They're making a lot of net income every quarter, like 500 mil plus a net income a quarter. I'll put them on the watch list, but they aren't a U.S. company, so you might get some weird taxes. Yeah, so look, they're a Netherlands company, so that makes more sense. Anyway, they're interesting. What's an appropriate number of stocks for a beginner? 5 to 10. And honestly, if you're looking for something to buy, I would first put again, not financial advice here, but I put most of your money in the S&P 500, which is ticker symbol VOO. It's just, oh my goodness. VOO is the S&P 500. You should just get 7 to 8% of your money back every year. That's what it historically averages. You're not, stock market isn't really get rich quick. It's you preserve and build wealth. You turn 100, you put in 100, goes from 100 to 107. And then from next year, it goes from 107 to 120. Then the snowball continues from 120 to 180. You kind of get the point there. It's not really get rich by 1 year. So, again, none of this is financial advice here. I don't sell a course, book, nothing. I'm just on here giving my opinion. That's just what I found works the most. Just buy and hold great companies and don't sell out of them just because the valuation's a little high. So here's DoorDash right here. DoorDash has been crushing it as well. Man, look at that. DoorDash is at an all-time high right now. Jeez. So let's see. Total order metrics. They got 730 million orders. The free cash flow is ridiculous. Look at that. 500 mil of free cash flow a quarter. And they're net income positive now. Look at that. They're making like 100, 200 million of net income a quarter. When if we zoom out, they used to lose a couple hundred mil a quarter. So they're the most profitable they've ever been. The free cash flow is nuts. So yeah, congrats if you own DoorDash. Dude, they're great, man. The financials look very strong there. They might continue to win, kind of like Reddit. Yo, homie, 307, I remember you from last night. By the way, I actually have to go in 2 minutes. No, I don't want to end the stream, but I have to. We're going to be streaming at 7 to 8 p.m. tonight. So if you want to hit the follow button, hit the notification bell, we're going to be doing another 2 to 3 hour long live stream tonight. So make sure you hit the follow button. And here's ENSG, last stock we'll look at here, $8.8 billion company. And they're trading at a pretty fair valuation. Look at this, a 27 PE. Historically, that's a pretty fair PE. Skilled services, I wonder what that means. Skilled services. Look at that. They're making 80, 90 million of net income a quarter. Revenue's up 18. Net income's up 18. Pretty good balance sheet. They're deleveraging a bit. Cash flow's up a bunch. So, hey, not too bad. So, I got to go right now. I have to be upstairs in 1 minute. So anyway, I hope you guys have a great rest of your day. Make sure you hit the follow button. We're going to be live in a couple hours from now. And again, hey, if you're looking for the best brokerage ever, in my opinion, it's this app right here. If you want to download it, it's in the link tree in my bio, very first link there. It's the affiliate link. If you deposit $100, we'll both get some free stocks on it. So, hey, anyway, see you guys in the next one. We'll be live in a couple hours at 8 p.m. Eastern time or sooner. And thank you all for the ones on the YouTube stream. Y'all are the real ones. TikTok literally banned my stream and stuff midstream. So thank you so much for being here. Yeah. Hey, Johnito, homie 307. Sorry. We'll be streaming at 8 p.m. tonight. I never normally stream this early, but I wanted to do it anyway. Thank you guys so much.